That's one of the better performers today. Well, let's dive into the luxury story as Gucci owner Kering has reportedly held exploratory talks with Italian skiwear maker Moncler, which has French roots, over a possible takeover. According to Bloomberg, the talks are at a preliminary stage. Kering stock up about 0.5%, waiting for a trade on Moncler. But often we've seen this trade where you've got a bid potentially doing the rounds, and both stocks, the acquirer and the prey, tend to be moving higher. The LVMH Tiffany story was a good example, Jeff.
Yeah, very early doors though, isn't it? Let's be clear about this. If we're in exploratory talks, no one's really talking about what a premium to the current trading price should look like. I guess we need to see what Moncler does here to get a real sense of whether this is real or whether this is just chatter.
Well, they're just huddling in a chalet at this point, aren't they, having a conversation about those jackets?
Huddling in a chalet, having it. That's an interesting thought. Charlotte is with us. Let's also introduce Frédéric Carrier, Head of Investment Strategy at RBC Wealth Management. Good morning to you and welcome. Charlotte, just set out the stall for us here. If we are heading towards some kind of negotiated deal, do we have any sense at this point what pricing will look like based on previous deals?
Well, we don't have a sense for now, but all you can say is in terms of brands, that would make sense. We have a consolidation in the sector. We've seen LVMH run with this Tiffany's deal, and the other two giants we were expecting to come up and look for targets. So the other two giants would be Kering and Richemont looking for other brands, and we have a lot of few standalone luxury brands like this that have been seen as potential targets. You had Burberry, Ferragamo, Tod's, and Moncler was one of the names that kept being cited by investors as potential targets. So here for Kering would make sense. One, because they rely heavily on Gucci. It's about 50% of their revenue. Gucci is having a soft landing, still doing well, but slowing down in terms of sales. And Kering has been trying to diversify away from that brand. They've been pushing a lot into Bottega Veneta. That is doing quite well. They have a lot of Italian brands in their portfolio. So again, Moncler is one that wouldn't make sense in their portfolio here. The skiing luxury sector is one that has been doing really well, in particular in the US. And so that is a market where Kering and, as we see, LVMH are keen to develop. So again, here on paper, it would make sense. Now, like you say, we're waiting to have potential numbers to have an idea of how much Kering would be ready to pay, and if the price tag of Moncler makes sense here.
What do you think, Frédéric, about suggestions of further consolidation in the luxury sector? We look at some of these companies, the share prices are not necessarily cheap, you could argue.
We're seeing consolidation in many different industries, probably due to the low cost of financing. So this is probably in financial sector, many other sectors, this is probably a trend that will stay with us for some time, so long as interest rates are quite low and financing costs very affordable.
Just weighing up the market cap of Burberry versus Moncler, and roughly the same, which means that there is firepower for this size of acquisition in Europe. But it then begs the question, why not Burberry? And I think about the story that's unfolded around Moncler. It's been so successful in creating a very strong luxury brand. Lots of good stores, online presence. Contrast that to Burberry, where it's been stop-start on the design team, where it's not entirely executed around the idea of luxury.
And Moncler has a very specific offer. You know, it's difficult to think in this luxury sector to think about the specific kind of puffer jacket that is very fashionable at the moment. You know, Burberry is a brand that doesn't have this specificity as much as Moncler has. So I guess in that sense, it makes it more special and maybe more attractive.
It does beg the question of how much more consolidation can take place at this point before regulators step in. We've got two massive conglomerates here, Kering and LVMH. And LVMH's market share is incredible. If you take a look at the dominance of this company, 200 billion already, and this is before it's even consolidated Tiffany's at the stage. So trying to get a gap closed between a Kering and LVMH and anyone else behind the two. When do the regulators say, hey, market dominance, red flag?
Well, you see...
In the luxury space?
Well,
I mean, who cares?
Well,
you know what? It's a discretionary purchase. This is not like power or something that is critical to life. If you are prepared to spend £2,500 on a puffy jacket, then good luck to you. Surely the regulator has no role whatsoever in the luxury goods sector beyond making sure the product is safe.
I don't know. What about innovation across all categories? And you've seen the prices, incredible prices, and Kering has been one leading the charge, I think, on that pricing structure. I would argue that the market dominance has already flagged up in the prices. that you are seeing an escalation maybe beyond what you should be seeing at this point?
Other coat makers, handbag makers, watchmakers are available?
No, all owned by the same companies.
You do not have to buy the highly priced luxury
all
product.
Owned by the same company. I mean, Kering, Bottega Veneta, Saint Laurent, all owned under one roof, and then you go to the other roof, and LVMH has an enormous suite of brands. There's not a huge amount of competition.
This sounds like a first world problem.
It is a first world problem.
Worrying about the price of your Gucci handbag.
Hey, if we have a competition regulator there, and they're going to regulate all sectors, why are we suddenly saying they're not going to regulate luxury? It's because people who are wealthy enough can afford it. It doesn't work that way. You regulate everything.
I think it would be ridiculous, but that's my personal opinion. I just feel that this sector is different from other sectors, and no one is forcing you to pay up.
This is the same argument around technology, and there has been a comparison made by some of the banks recently that luxury companies in Europe are very similar to the FANGs. If you get huge market dominance, you get huge eyeballs, a huge customer base, it means you can do much more with that customer base. You've got a huge deep pile of pockets. Why can't they start consolidating other assets using those cash reserves at some point? And that's the problem, isn't it, when you have market dominance?
Frederic, we invited you in to talk here. Karen and I could monopolise the next half hour of the programme, at least on this subject. I won't ask you specifically on the regulation unless you want to volunteer a perspective, but it does seem to me that this is indication perhaps that we still have a healthy underlying risk appetite at the corporate level and potentially at the investor level here, even as people are nervous about the pullbacks that we've seen in markets over the last couple of days related to the China story.
In the short term, yes, and I seem to come often after we've had a very long stretch of gains. But yes, a bit more, investors are perhaps a little bit more nervous at the moment, but looking out to 2020, we do expect that equities will reach higher grounds, though we're also more cautious than we've been over the last decade. We think they'll reach higher grounds because there are reasons to be bullish. The economy is doing well, monetary conditions are loose, and we know that recessions tend to be preceded by times where monetary conditions are tight, so it's difficult to get loans, it's very expensive to get loans. It's not the situation at the moment.
You've made a number of points there. I just wanted to pick up on, you said the economy is healthy. Which economy is healthy?
Global economy, so it is growing. But
we had a German manufacturing series this morning that was worse than expectations. We had an employment report, the ADP in the States yesterday, that was worse than expected. We had an ISM services number that was still above 50, but it wasn't great.
It's not growing at levels that we are historically used to, but it's still an adequate level, a level which is high enough for equities to eke out some modest gains next year. You can have growth of 1.8% and still be able to generate earnings growth in the mid-single digit. And that's probably enough for equities to grind higher. And yes, there are pockets of weaknesses. Manufacturing is one of them. Manufacturing in the US is 10% of GDP, so relatively low. What's driving the economy is really the US consumer. And what we see there is that unemployment is at a 50-year low. Housing prices are back to pre-crisis levels. And household balance sheets have been rebuilt. The saving rate is at 7%. And we think that the U.S. consumer will be able to continue to drive the global economy, the U.S. economy, and by some extent the global economy. So for us, there are reasons to be bullish, also reasons to be cautious. The yield curve having inverted earlier this year, and the fact that bull markets tend to peak before the recession arrives, sometimes as much as a year before. So it is conceivable that markets peak in 2020, but we do expect higher grounds for equities.
What's wrong with some of the market optimism? Because there is a sense that maybe a trade deal is still imminent between the US and China. If that is the case, what happens in Europe next year? Because the scene could look very different if you've got stronger demand, a recovery in the manufacturing sector, and then a spillover to services, perhaps less central bank intervention required. What does that type of year look like for Europe then?
In terms of China, we might have a deal. We don't expect a phase one deal. We don't expect it before the end of the first quarter next year. But remember, it's just the beginning. These tensions with China will last for a very long time, and the situation will not be solved with this deal. So we expect the recovery that we've seen, the tentative recovery that we've seen over the last few weeks to take hold, and the year next year in Europe to be perhaps slightly better than it was this year, with manufacturing stabilizing. We don't expect a strong rebound in Europe, but stabilization. And for equities, the fact that things are not getting worse might be enough to bring them slightly higher.
Are there disclaimers here? What if Trump then in an election year turns the focus on to Europe in the form of tariffs? We've already had a prospect of retaliatory French tariff for digital services tax. What if we see a more aggressive Trump in 2020 against European member countries? Well, what happens to your forecast then?
That would be a more negative scenario.
So that's a disclaimer.
Sure. There are many disclaimers. The geopolitical environment is more worrying than it's been in quite some time. But nevertheless, we tell our clients to really focus on fundamentals, meaning the economy, not great growth, but good enough growth, earnings growth, and valuations. Valuations in Europe and in Japan are particularly attractive, so that should help as well.
But we've learned overnight that there are some landmines out there for the unwary investor, and maybe they should have been wary, but the suspension of this M&G £2.5 billion fund invested in UK property surely has to ring alarm bells somewhere for any investor who's stretched for yield into parts of the market that they've never been in before or they don't necessarily understand. How concerned would you be to see this story unfold, and what message are you sending to your investors about what we see with M&G? Because coming after Woodford, it just sends another signal that people are in the wrong part of the market.
With very low interest rates, investors have been pushed into taking on more risk than perhaps their comfort zone should have suggested. And we see that the solution to the previous debt crisis is probably sowing the seed of the next crisis. So that is one area that we highlight. We tell our investors to stick to where they feel comfortable according to their risk constraints.
Which is equity primarily, or very liquid instruments?
Well, it depends on the risk profile of the client. We think that there's still a place for asset allocation to fixed income. Fixed income, by and large, has better capital preservation attributes than equities and tends to reduce volatility in portfolios. Clearly, over the last year, we've seen fixed income and equities move in the same direction to a very high extent. So the diversification benefits might be lower than they've been in the past, but they are still there. So we have an allocation. We would suggest an allocation to fixed income, again, depending on risk profiles.
Can you anticipate any capital return from those investments, though, given where we already are on yields?
So we expect returns to coupon-like returns for fixed income. We don't expect as we've had in 2019.
Right. So let's just talk about some of the key markets across Europe, because the core, if you look at the performance in the French market and recent days, it's been one of the decent performers. German stock market has a stunning year, and Italian stocks have done okay as well. What do you think next year holds in terms of the individual markets? Do they all rally in lockstep, or do we need to be thinking more subtly about the politics in each country come 2020?
A lot of the headwinds in terms of politics have not materialized this year. So we were worried at one point about populists in Italy. We were worried about a hard Brexit and the impact on the Eurozone. These have not materialized. There are still risks, such as you highlighted, trade relationship with the US. So that also has not materialized this year. There are a number of factors, political risks for next year. Nevertheless, again, focus on the economy, which is stabilizing, and that should be enough for some earnings growth for corporates.
What are we going to see on the bond front? I mean, this year's been marked by some extraordinarily low levels on German bonds. Do you think that we've hit the lowest point that we can hit on German bonds?
We think yields will be anchored going forward. Where we see our opportunities are more in credit in Europe. However, we would stick to the quality end of the market.
I'm just going to jump in. We've got a Moncler number to show you. We've been waiting it out for the luxury company to reflect the fact that there are talks taking place behind the scenes with French conglomerate Kering, and you can see the spike, double digit. Charlotte, what do you think of the reaction?
The Moncler reaction is not surprising. As we've seen, it was a potential target. And we see, interestingly, Burberry and Ferragamo, that also one of these standalone luxury brands, have been seen as potential targets for these big luxury conglomerates of LVMH and Kering. So that is not surprising that they're reacting like this on the back of these reports of exploratory talks.
We need to just be very careful about this, don't we? Because neither company is confirming the approach at this stage, are they? And this is a story that we're reporting, that Bloomberg have reported, and they've reported it based on somebody else's sources. So there is a bit of a line here. But, you know, the market's taking the rumour and running with it at this stage.
Given the consolidation that has been going on the back of this LVMH and Tiffany deal, that's why the market is keeping an eye on it more seriously than just a random rumour, I guess.
And the reality is that these are not easy assets to acquire either. You've got a lot of vested interests behind the scenes. A lot of time and money and effort has gone into creating some of these names. If you think about the founder or the man who's remade Moncler in recent years, probably not that keen just to hand it over on a silver platter.
Often they get them on board. It was like that with LVMH when they bought Bulgari, especially when they're family-owned business, because a lot of these luxury brands still have family members as part of the management. They bring them on the board of LVMH or Kering or something like that. Mr. Ruffini, has about a 20% share in Moncler. And now the question, I guess, would be part of conversations on bringing on board within the group or not.
Yeah, I was just doing a little bit of work on the Tiffany deal here. So ultimately it was a bid that was a 37% premium to the undisturbed price. It's just worth bearing that in mind as we continue to monitor how far Moncler moves at this point, because it gives us an indicative suggestion of what the potential upside could be here. So 10 to 11% at this point perhaps suggests that some are trading this stock rather than buying it on the expectation that the deal will happen. Karen.
Jeff, thank you very much. And thank you to Frederic for joining us from RBC Wealth Management, and to Charlotte, our correspondent this morning. And just a quick look at some of the other stocks we're watching for you closely. SAS, the airline we spoke to on the back of its numbers, shares, as you can see, down sharply after the Swedish company said an improved fourth quarter was not enough to help meet its financial targets for the fiscal year. The firm also forecast growth to slow further in 2020, blaming increased fuel costs, strike actions, and a weaker Swedish and Norwegian kroner for the challenges. Now, despite the downbeat results, CEO Rickard Gustafsson sounded a defiant note when speaking to CNBC earlier. Take a listen.
We had a very, very good momentum in our fourth quarter, where we ended the fiscal year 2019 in a strong way, significantly better than the year before, and driven by a great response from our customers. We had more passengers, we had more happy passengers, they were more pleased with our service, and were able to deliver also a robust operational performance in terms of regularity and punctuality. So those are the good things that we need to bring forward into the next year. However, though, due to some of those headwinds that I explained, we are forecasting a rather challenging year for 2020, where the outlook in terms of EBIT margin is designed at 3 to 5%. So, of course, there's more work to be done before we are back to where we want to be in terms of shareholder value creation.
Coming up on the show, oil ministers gather to discuss further potential output cuts as we await Saudi Aramco's final pricing.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
What's the sign of a really first-class funeral directors? Is it how they're with you every step of the way? Is it the care they take looking after your loved one? the superb organisation they show on the day itself, the thoughtful little touches you maybe weren't expecting. Yes, it's all those things. But there's another sign you should also be looking for. The one that says Dignity. You'll find it's on every one of our branches and on the Dignity website. When you see it, you'll know you couldn't be in better hands. Dignity Funeral Directors, taking the greatest care.
Ho, ho, ho! Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC, plus music, podcasts, and live sports. TuneIn Premium brings the best audio to you. Forget the stocking. And stuff their phone with the Everything Audio app. Search Premium to upgrade today.
It's Liz Hernandez with your TuneIn Music News Update.
Taste of Country convinced a bunch of country stars to recite "'Twas the Night Before Christmas." We're talking Luke Bryan, Trisha Yearwood, Low Cash, Gone West, Kelsey Ballerini, Little Big Town, Chris Young, Michael Ray, and so many more. You can check it out now. Meanwhile, RollingStone.com has a 12 Things We Learned from the Garth Brooks The Road I'm On documentary, available now online. For more country music, head over to Country Roads, exclusively on TuneIn.
It's college football conference championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
We're back. A deeper supply cut of more than 4,000 barrels per day is the main scenario up for discussion. That's according to Reuters sources, with talks between OPEC and its allies set to kick off in just over an hour's time. Hadley and Dan are in Vienna with the story. Good morning.
Hey, good morning, Jeff. That's absolutely right. I mean, we heard rumblings of this during the F1 weekend in Abu Dhabi. It now seems as if it's all coming to fruition. But I got to tell you, I'm getting kind of tired of some of our colleagues in the U.S. media wondering about the cabal of OPEC plus producers. I mean, these are basically economies that, as you all very well know, need a certain oil price to do well.
Absolutely. And, you know, we came into this meeting basically expecting an extension of the current OPEC deal, 1.2 million barrels. The real story so far has been commentary from the Iraqi saying, hang on a second, we need to see a 400,000 barrel cut. And as a result, I actually spoke with Halima Croft at RBC Capital Markets earlier this morning. She now says this is a live meeting. Listen in.
This actually is something which is very much a live option. I mean, we are actually hearing that this was not a proposal that the Iraqis made, but that it was a proposal made by the Saudi government. And so the fact that this is potentially coming from Saudi Arabia, the driver of the OPEC bus, I think means that we should give it a lot more credibility than if it's coming from a country that is very compliance challenged like Iraq. So I do think this is being debated at the moment, and I think it's a potentially very realistic option.
Halima Croft weighing in earlier on CNBC. Hadley, this is going to be interesting to watch because even if does OPEC decide to cut production further today, it could be a double negative for them because they're still going to be losing market share to the US.
Absolutely, but I think that's something that they've actually had to price in, and particularly over the last couple of years. You know, speaking to oil ministers, not just in the Gulf Arab countries, but coming here to Vienna and talking to them, they kind of understood that that was on the cards, and they've been quietly talking, as we know, to members of the U.S. oil industry for years now, trying to figure out how they were going to make a way forward here, because it is all about getting a price floor, isn't it? And also for Saudi Arabia, I mean, His Royal Highness Prince Abdulaziz, yes, this is his first OPEC meeting as the head of Saudi oil and their industry, but at the same point, this is a man who's been a technocrat in this industry for his entire career. He's turned down multiple jobs, multiple ministerial positions over the years just to continue doing what he really loves. And frankly, there's been so much speculation about how this would all go for him, and it seems as if he's got the whip hand, at least for now.
Absolutely. He had a really positive reception when he was first appointed. His first comments helped to support the market market. It's going to be interesting to see what he says today as well, particularly on the issue of compliance. Under Khalid al-Fallah, it did seem like he was willing to allow Saudi Arabia to shoulder the burden of responsibility for these cuts. OPEC is essentially under new management under His Royal Highness, and as a result, we're likely to hear him perhaps hitting back at those laggard members like Iran, like Iraq, and also like Nigeria as well, which have really been dragging their feet on compliance when it comes to the cuts.
Absolutely. So a lot more to come, guys, from out in the cold.
Can I ask you about the price? If you look at the action over the course of this year, you can see that the oil price is prone to sharp moves to the upside and also to the downside based on news flow. And the conversation you're having very much around the supply side. But what about the demand side? And what if we get both? This is very hypothetical, of course, that if there's a trade deal linked, we suddenly get a focus on the demand side at the same time where the supply side, as you fleshed out, may be tackled today. Could we see a big move upwards if both of those issues come to bear? We get a trade deal and we get an OPEC supply cut.
That might, in fact, be a bridge too far. I mean, the ministers that I've spoken to off their record, Karen, over the last couple of days, not just focusing on this meeting, of course, but in the run-up to this meeting, especially with the fact that we've got to talk about now an Aramco pricing. I mean, folks, rather more hesitant than willing to be positive there. I mean, I don't know what they've been telling Dan, but that's the message that I've had so far.
Yeah, absolutely. Someone suggested that part of the reason that OPEC would be looking to cut production further today would be to give the market a sugar pop ahead of the Aramco IPO. I mean, whether or not that remains to be seen is still up for consideration here. But one thing that OPEC can't really hide from are the deteriorating fundamentals of the global economy, according to some analysts, and also waning demand for crude oil, a long-term waning demand as well. Oil is very much a sunset industry, according to some, particularly the protesters over on the corner. So it's going to be interesting to see how this industry continues to confront the challenges of technicalization as well, and the improving technologies that are going to eventually replace oil as a source of energy in the future.
What are the Russians going to do on this? I see some Twitter comments being reported to Minister Novak at this stage. He's keeping his cards pretty close to his chest, but we know that the Russians have had some issues, maybe not the minister, but others within the Russian oil industry who are concerned that this arrangement has gone on a little too long and it isn't necessarily helping all those who would like to increase production out of Russia.
It's interesting. I asked this very question to some ministers over the last couple of weeks, Jeff. I said, how quickly and how quietly into the night do you think you'll be able to keep Alexander Novak as a result of all that pressure from the Kremlin and from Russian energy producers? I thought it was really interesting to hear again and again the Russians really compared to the U.S. industry in terms of what happens next and the actual need for a floor price for oil markets. I mean, this is something at the end of the day that they know that they've got to get to, that they know that they all need, in spite of the fact that they got pushed back at home. And it seemed to me, from speaking to these ministers off record, that they pretty much figured that they had the Russians in the bag.
And Russian companies have basically suggested that they would not like to see further cuts on their own part. And the Russians, you could also contend, are pretty happy with the current price range, 60 to 65 USD, versus the Saudis, who probably need to see the oil price a little bit higher to achieve domestic economic needs, and also the Aramco offloading as well.
Dan Hadley, I'm sure there's a reason why your producer has put you on that particular cold corner in Vienna, but I know Hadley loves horses and all those carriage trips that are taking place behind you. Is it strategically positioned so you could just hop on and go for a tour of St. Stephen's Cathedral?
Okay, guys, if you had left us standing here any longer before coming to us, we were actually thinking about just popping a ride and heading straight to the hotel next door for a hot meal. But unfortunately, that doesn't seem to be in the cards for us, at least for several more hours.
Well, good luck out there, and hopefully you'll get to pat a horse. Hadley, thank you very much, Hadley and Dan. We'll cross it to you a little bit later on CNBC. Ahead on this show, the UK Conservative Party unveils its plans for the first 100 days in government. Should it win next week's general election? We'll discuss the latest from Westminster.
The CNBC app has new features.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
At TUI, we can help you find the perfect getaway for two. We fly to over 70 destinations worldwide, so wherever you have in mind, we'll help you get there. Book now and spread the cost with £0 deposit when you pay with direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At all protected.
Hi, my name's Ada. I work in IT, and I want to say thank you very much for listening to Tune In. From my family, hope you have a great holidays and Happy New Year.
Why do some leaders inspire action when others don't?
The best leaders are actually the best followers because they don't see themselves as the thing to be followed. They actually see themselves as following a cause bigger than themselves.
I'm Guy Raz. How leaders inspire movements for change. That's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
It's Liz Hernandez with your TuneIn Music News Update.
Taste of Country convinced a bunch of country stars to recite "'Twas the Night Before Christmas." We're talking Luke Bryan, Trisha Yearwood, Low Cash, Gone West, Kelsey Ballerini, Little Big Town, Chris Young, Michael Ray, and so many more. You can check it out now. Meanwhile, RollingStone.com has a 12 Things We Learned from the Garth Brooks The Road I'm On documentary, available now online. For more country music, head over to Country Roads, exclusively on TuneIn.
A sale on the ski slope. Shares in Italian jacket maker Moncler surge on a report Gucci owner Kering is eyeing a takeover, while other possible luxury targets get a boost amid catwalk consolidation. It's a live meeting, say OPEC watchers, as the oil producers and their allies reportedly make a 400,000 barrel per day supply cut the main scenario for discussion. Investors eagerly await the pricing of Saudi Aramco's IPO, with the oil giant's bookrunners reportedly recommending a pricing at the top end of the range, making it the world's biggest public offering. And turbulence for shares in Scandinavian Airlines. They're sharply lower as the Swedish company misses full-year targets, while its CEO tells CNBC he does expect a difficult year to come.
We are forecasting a rather challenging year for 2020, where the outlook in terms of EBIT margin is designed at 3 to 5%. And so, of course, there's more work to be done.
Markets here in Europe have been trading for half an hour so far. And what we've got has been a mostly firmer day across the board. A couple of exceptions, though. The UK stock market, which is weaker in the face of what has been a stronger pound in recent sessions. 131, for instance, the level we've crossed. And also the DAX, a little bit weak versus the rest of the markets in negative territory at this point, versus gains on the French market up by about 1/3%. Across the periphery, slight gains as well. So the benchmark reflecting what we're seeing across many of these European indices. Let's take a look at the sectors at this point. Again, on Wall Street, just reflect on what happened and why we're seeing a little bit of green on the boards and the session yesterday. There's some hopes alive still that a phase one trade deal is in sight. There was a report, an unsourced report that crossed yesterday suggesting that may be the case, in contrast to President Trump himself dousing cold water on hope for a trade deal, suggesting that there's no firm deadline, and maybe he'd be inclined to let it slide till the end of 2020 after the presidential election. So markets moving on optimism at this point, and you can see this morning real estate, retail, oil and gas, the top performers. Oil and gas interesting as OPEC sits down to discuss production cuts across in some of the weaker sectors. We've got travel and leisure telecoms, basic resources at the bottom end of the charts. By stocks, you'll see a whole bunch of household goods in the basket of stocks, and those are the luxury names. Moncler, after reports, again, not a lot of detail crossing at this point, reports that they are in exploratory talks with the French conglomerate Kering, and the French group may be interested in buying the puffy jacket maker. And this follows a steady stream of consolidation in the sector in recent time, with LVMH going after Tiffany and paying a handsome premium. So that has put some movement into other share prices in the sector. Burberry, 3% north. Hugo Boss also jumping in session. Quick look at some of the underperformers. M&G, after the gating of another UK property fund, the stock marking lower by 2.4%. Royal Mail also lower, and IG Group right at the bottom end of these charts today. Jeff.
Karen, thank you. Let's focus on politics here in the UK. The Conservative Party has vowed to take the country out of the EU by the end of January and deliver a post-Brexit budget in February if they win a majority in next week's election. The party plans for the first 100 days in office also include a series of tax cuts and the launch of a review of security and foreign policy. Meanwhile, the Labour Party will announce extra funding for school upgrades and measures to combat child poverty in a major policy announcement on education later today. The polls, I think it's been largely suggested by the currency analysts, are, as they point to a Conservative win, encouraging sterling higher. And here we are, 131.43 on sterling dollar, and the pound is also making gains against the euro this morning of about a similar magnitude. So let's pop up that chart and have a look. Well, there you go. The chart calls me a liar. We've just backed away from some of those gains. But as you can see, we've had a spike here, and we are seeing the pound. Oh, this is euro dollar. That explains it there. That explains it. There was me ready to eat humble pie here, and it was actually somebody...
You were correct.
Wrong button.
There's a movement about a tenth, just over a tenth.
Still not quite the 0.3 that I was talking about from earlier in the session, but you can see exactly how the chart is moving. Anand Menon is with us, Professor of European Politics and Foreign Affairs at King's College London, to help us understand what the latest polling is suggesting here. And you made a brilliant comment to me off air while Karen was at the wall, saying that voters have to be tactical and rational as they think about their choices at this point, particularly if they are going to fall in that camp of tactical voting.
Yeah, and rational in the sense that economists mean rational, which is to say you need the information. There's no point in saying, I'm going to vote tactically unless you're aware of where the parties stand relative to each other at this current time, because quite a lot of people who vote tactically in our elections get it wrong, which actually doesn't achieve what they're trying to achieve.
Well, you couldn't argue that it's not clear in this election, could you? I mean, we have pretty firmly seen the stalls set out here and the agendas made clear. It's only the Liberal Party that's clearly stating it believes in Remain, as I understand it. The Tories have said will be out as soon as possible if they get the majority, and Labour has vacillated but is talking a second referendum.
Well, there are two camps in this election. There's a Leave camp and there's a Remain camp, but particularly on the Remain side, I think the issue is more a question of what the situation on the ground is in individual constituencies. That is to say, you might want to vote for a party that is going to give you a referendum, but then you need to know whether you should cast your vote for Plaid or the SNP or Labour or the Lib Dems, because you need to get that right if you want to defeat the Conservative candidate in that seat. So that's what I mean by rational, is that in your seat you need to be aware of where your vote needs to go. Now, there are a number of websites out there that point people in that direction, but actually what the data suggests is that very, very few voters actually bother looking at those things.
I think it's almost necessary if you get a tactical vote. I'm just reading a report and I can't make head or tail over it, that the person who you put down the third or your third preference could be the one that carries the vote, which is incredibly confusing for most voters out there when they've already been confused over Brexit. When it comes to voting at the election, and we've heard so much noise around Brexit, and this election came a Brexit impasse. Do you think Brexit is actually going to be on the ticket when people go to the vote, and will they be casting their vote on that?
Well, it's very hard to say. I mean, I assumed, like many people, I think, that 2017 would end up being an election about Brexit. But if you look at the data afterwards, actually, social class was the biggest driver of how people voted, which is how it is in this country. I think, if the Conservatives are successful in breaking down that so-called red wall of Labour seats, so traditional Labour strongholds go Conservative, then yes, we'll be able to say...
How do they do that? Tactically, how do they do that?
Well, by talking about Brexit, because the calculation is, in a lot of those seats, there are a lot of Labour Leave voters who might not vote for the Labour Party because they feel betrayed by Labour over the Brexit question. So the Tories want this election to be about Brexit. Labour want this election to be about anything other than Brexit, which is why Jeremy Corbyn's going around the country talking about free school meals, talking about investment in the NHS, but not really talking about Brexit at all.
To what extent do you think the recent terror attack will play into the election? I know there's been some talk about Barrow going Tory after decades of being staunch Labour because of worries about the defence industry spending and employment in the Barrow area because of Corbyn's position previously on the military. Will the recent terrorist attack and this
the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
There's been a report published in July with some recommendations that the government said we will look at them and study them, but we don't know what's going to be in it. And the key is that they want to. You have 42 pension regimes in France. So train drivers have one, the Paris Transport RATP have another one, refinery workers, EDF, even the Opéra de Paris workers have a specific regime. So they want to centralize all this into one system to make it €1 paid into the system will give the same benefits in the end. Again, a very tricky one here. The mobilization at the moment is expected to be massive, at least today. The question is how long will it go on for? The public opinion at the moment is on the side of the strikers. Just about 55% is in support of them. Now the question will be how long will this strike go on for? Will the momentum carry on and become something bigger? You have pockets on discontent with students, lawyers, hospitals, so a lot of small disputes here. Can they all gather together and become a bigger problem for the Macron government? Or will it fiddle away? You have Christmas in the middle. Will the public opinion turn against it because they get affected every day to go to work?
Sure.
So that would be the crucial thing here.
We've got to wrap it up. That's the end of the programme. Thank you very much for taking us to the end of the show. Thank you for tuning in this morning. From Karen, myself and the rest of the team, have a safe day if you're in the markets and stay with the channel. Street Signs coming up right after this.
Anytime, any place. Watch CNBC Primetime live.
There's a growing threat from Moscow Center, and Britain's intelligence service think they've found the man for the job.
The natural-born agent runner is his own man. He may take his orders from London, but in the field, he is the master of his fate and the fate of his agents.
A powerful portrait of our times, told with unflagging tension by one of the greatest novelists of our age, John le Carré's Agent Running in the Field. Available now at Waterstones.
What if your email was organized by project and not by date? What if everyone looked at the same thing instead of their own inbox? Then it wouldn't be email at all. Forget your fragmented, jumbled inbox and make the change to channels in Slack. Spaces dedicated to individual projects, topics, or teams. All your communication is neatly organized and everyone is on the same page. Slack. Choose a better way to work. Get started at slack.com.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroëns excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
Get what you wanted this Black Friday. Sleek new laptop. Or one of those know-it-all smart speakers. So now is the time for Sky Superfast Broadband. It's totally unlimited, powerful enough for all your gadgets. And it's just £27 a month for 18 months with £19.95 setup fee. Another great deal. Pause your new 4K games console and search sky.com. Sky Fibre areas, speeds vary by location, no traffic management policy. See sky.com. Prices may change during this period, terms apply. This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010? Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last. Ends 1st of January.
My name is Lucas Askew, and I lead the sports marketing team here at TuneIn. I just want to say thank you for your loyal listening here on TuneIn. Have a great holiday season with your family, and please continue enjoying all the great sports games throughout this wonderful season. Happy holidays.
It's College Football Conference Championship Weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Good morning and welcome to Street Signs. I'm Joanna Versace.
And I'm Willem Marks. We're both in London. Here are some headlines for you.
Our top story today, oil prices cooling off after a 4% surge overnight. Top oil ministers meeting in Vienna to discuss a potential deepening of the OPEC production cuts.
Investors eagerly await the pricing of Saudi Aramco's IPO, with the oil giant's bookrunners reportedly recommending a price at the top end of the range, making it the world's biggest public offering.
And a possible sale on the slopes. Moncler surges on a report that Gucci-owned Kering is eyeing a takeover, while other possible luxury targets get a boost amid catwalk consolidation.
Turbulence ahead. Shares in Scandinavian Airlines are sharply lower as the Swedish company misses full-year targets, while its CEO tells CNBC he expects a rough year to come.
We are forecasting a rather challenging year for 2020, where the outlook in terms of EBIT margin is designed at 3 to 5%. So, of course, there's more work to be done.
Well, it's a busy day if you're an oil trader. OPEC members and their allies will meet today to decide whether they should take fresh action to support prices. Reuters has reported that a deeper supply cut is the main scenario up for discussion, and it would represent more than 400,000 barrels a day. But yesterday, Iraq's oil minister told CNBC there was not yet a consensus for such a move. He said he would prefer to roll existing supply cuts over to the end of next year. Our colleague Dan Murphy joins us from outside that OPEC meeting in Vienna. Dan, you spoke to the Iraqi minister yesterday. What else did he say about the possibility of these cuts extending?
Hi there, Velleman. Good morning from Vienna, where top oil producers are meeting in the building behind me to discuss a potential deepening of the OPEC production cut deal. Now, this is a fascinating development, certainly coming somewhat of a surprise, because coming into the meeting, the initial consensus here was that we would just see a rollover of the current deal, that is 1.2 million barrels coming off the market. However, insert the Iraqi oil minister, who essentially broke ranks here, telling CNBC that we need to see an additional 400,000 barrels of oil coming off the market to deepen those cuts out to 1.6 million in order to stabilize the oil price coming into 2020. He spoke exclusively with CNBC late yesterday, elaborating on that call. Take a listen to part of what he had to say.
I don't say I doubt that. I think there will be oppositions by some, and others will support it. What was the final verdict? I think it's too early to say. It is very much dependent on a number of, let's say, 2 or 3 main factors. One, the interests of individual countries, okay, especially the big producers. Whether those who would like to see stability and improve, prices, and others want to maintain their share, okay, because at the end of the day, if there's additional cuts, the contribution would come, most of the contribution would come from the bigger producers.
If the deal is extended either to June 2020 or perhaps out to the end of 2020, what will be the impact on the global oil market, in your opinion?
If it is extended to the, say, middle of the year, this is not yet, actually, a scenario that was studied is the first quarter. It will not be that effective. The glut, the increase or in the commercial reserve will continue, and therefore we don't see significant change. But if tomorrow OPEC Plus decide to roll over the 1.2 till the end of the year, I believe also, based on the analysis, that it will be more significant.
Here in Vienna, Iraq's oil minister speaking exclusively to CNBC yesterday. Coming into the meeting, there are a couple of other things to look out for. And first of all, I just had a conversation with RBC Capital's Halima Croft. She is a deeply sourced OPEC analyst. She tells me that this is very much a live meeting. She says that that call from the Iraqi minister for an additional 400,000 barrels coming off the market didn't necessarily come directly from Iraq. In fact, her sources say it came directly from Saudi Arabia. So this is going to be very, very interesting, particularly on the issue of the deeper production cuts and the extension of the deal, but also on the issue of compliance as well, because this has really been a sticking point for a number of OPEC producers. Compliance was less than 100% in October and likely less than 100% in November. And as a result, the new Saudi energy minister is very much going to be focusing on ensuring that those laggard members like Iraq and Nigeria do more instead of dragging their feet on their obligations under the current deal. So expect to hear more on the issue of compliance. Expect to have this deal extended either out to June or to the end of 2020. And in this case, yes, also expect perhaps deeper production cuts as well. One other factor I also just wanted to mention here is the impact of the Aramco IPO. This has been a news flow, a really big focus here, a news flow that's really been capturing the attention of a lot of the OPEC producers. There was a suggestion that perhaps Saudi Arabia may have been pressuring some among the group to do more, not only on the issue of compliance, but also when it came to production cuts. We're likely to get more clarity on the pricing of that Aramco IPO later on today, and that is certainly going to be weighing on the minds of these ministers when they meet in the room behind me today and tomorrow. Guys, it's back over to you.
Dan, I want to bring in another very important player at this OPEC Plus meeting, and that's Russia, because, of course, the Russian energy minister last Friday sent the markets into a bit of a tailspin by suggesting that he would think a decision on extension should happen closer to spring of next year rather than at this upcoming meeting. And if you look at the Russia compliance levels, anyway, they've been producing above those output caps since August. How likely is it really that Russia play in if they do decide to opt for further production cuts and indeed an extension at this meeting?
Excellent question, Jomana. So clearly there's going to be some contention in the room. Remember, though, the Saudi-Russia relationship is critical for the overall OPEC group, so it's unlikely to result in a long-term fracturing. However, this is going to be an issue of contention. On the one hand, the Saudis would like to see perhaps cuts being deepened in order to give the market somewhat of a sugar pop ahead of the Aramco IPO. Their own domestic budget needs higher oil prices to achieve the obligations that they have to the Saudi Arabian people. But at the same time, Russian companies have also suggested that they would not like to deepen reduce their own output further and perhaps not deepen production cuts. And that's because in this current climate, Russia doesn't necessarily need to reduce output. Its economy and the Russian oil exporters can do very well with oil in their $60 to $65 range. So this is going to be an issue coming into the meeting. However, you could also possibly contend that perhaps Russia could put those issues to one side, at least in the short term, to support their friends in Saudi Arabia ahead of the Aramco IPO. So that's something that I discussed with Halima Croft earlier this morning as well. She suggested that, yes, that could very well be the case. However, this meeting is live. The outcome still very uncertain, and what happens in the room behind me over the next 24 hours could certainly have the potential to move the market in a significant way. So a lot to look out for, and particularly this issue of who's going to emerge victorious on whatever side of the deal it falls. Back over to you.
Always very exciting, these OPEC meetings, aren't they, Dan? And to your point, we saw already a very big jump in the price of oil yesterday, up 4%, one of its biggest price jumps in the last couple of months or so. That was Dan Murphy live in Vienna. I also just want to bring you some commentary we've had from the Iranian oil minister, Mr. Zanganeh, saying that they need to consult with OPEC colleagues and then they can make a decision. Presumably, that is in response to a question about what they are thinking going into this OPEC meeting. So that meeting will be taking place in the next couple of hours or so. So certainly we'll be watching out for flashes as and when they come out.
That seems like a good moment to bring in Neil Wilson. He is the co-CEO of EJF Capital. You're looking at opportunities on both sides of the Atlantic, but primarily looking in the US with your firm. And I want to ask you, when you look at the US consumer that's been so key to the continued resilience of the US economy over the last, let's say, 12 months, how do you factor in higher energy prices to your thinking about those consumers?
Well, first of all, it's great to be with you, Willem and Jumana. Thank you for having me. No, look, the consumer is incredibly strong. It's 70% of the economy, as you know, in the United States. And then you look at just recently, Black Friday, the statistics. You had $7.4 billion worth of sales. It was a record, except for Cyber Monday of last year. Then Cyber Monday happened, and you had $9.2 billion of sales, a 15% increase over last year. So the consumer is incredibly strong. And what we look at, we focus on financials. So when we think about energy, we think about how it impacts the financial market. And we focus particularly on the banking system. And what we look at from the energy perspective is, how does that really impact the U.S. economy? The U.S. economy is actually somewhat protected, not immune from the international trade discussions that have been going on and oil prices, but just really what does it do for the U.S. consumer and for the the banking system. And so we really focus on the small banks, and we think that there's a lot of strength there. Just this last quarter, for example, the community banks had incredibly strong performance. They had net operating increases over last year and loan growth over last year. So even though energy, we think, is going to be in that 55 to 65 per barrel range on the Brent side into 2020, we think that's kind of a stabilizing influence. And we really think that even though the economy is slowing with manufacturing, we think the consumer is going to bring the U.S. economy strongly into 2020.
Okay, so that's the US perspective. Let's bring in Spencer Welch. He's the Director for Oil Markets and Downstream at IHS Markit in his London office. Thanks so much for joining us, Spencer. So what, in your view, we heard $55 there mentioned by Neil, what in your view are the price parameters that will keep these OPEC Plus members and their allies happy when it comes to their own domestic economies and spending plans?
Hi, good morning. Thanks for having me. It's different for each of the different countries. So it depends on what percentage of oil exports makes up of their economy, their planned level of government spending, the imports that they bring into the country. So it is different. I think, the $60 per barrel is a significant threshold. Ideally, Saudi Arabia needs a number higher than that to balance their situation. Russia, they're okay with a number reasonably lower, so mid to low 50s. So it's different for each of the different countries, but I think there is a mental threshold of $60 per barrel.
Is there a price floor, though, Spencer? You talk across the board there, including all of those different countries, and as you rightly point out, all of their different priorities and requirements. Is there a price floor, you think, that would force them to take more drastic action than just rolling these cuts over?
Yes, I think that is $60 per barrel. And our view at IHS Markit is that if they were to just sustain the current level of cuts, that wouldn't be enough to stop the price from dropping down into the mid to high 50s next year, because we see significantly more production coming on stream faster than the world's demand for oil is growing.
So I just want to bring it back to supply-demand balance. And certainly there's lots of talk about not just extension, but further production cuts. Our colleague Dan Murphy sat down with the Iraqi oil minister, who himself had suggested that maybe in order to bring the market back in balance, you need to see an extra 400,000 barrels a day taken off the market. In your view, and according to your own analysis, how much production cuts are necessary to bring supply-demand back into balance?
Good question. It's a complicated question. It's interesting that Iraq is calling for deeper cuts when they're one of the countries that is definitely not complying with what's been promised already. But that's the politics of OPEC. Our view is that the oil market will have an excess production of around about 1 million barrels per day next year. But it built into that is the OPEC cuts being actually 0.8 rather than the current 1.2. So effectively, to bring the oil market right back into balance, they would need actual realised cuts of 1.8 million barrels per day. So that's actually an increase of 600,000, 0.6 million from where we are now. Now, they might be able to get away with a little bit less cuts than that and keep the price just above $60 per barrel. But our view is that if they stay where they are, 1.2, the price will drop below 60.
And just to bring it back to another point that you raised there, compliance obviously has been an issue. And to your point, Iraq is one of the countries that hasn't been fully complying with those production cuts. But overall, if you look at the last 9 months or so, compliance has been averaging around 120%. But the bulk of it has been borne by Saudi Arabia. Do you expect Saudi to continue to shoulder the large extent of the cuts going forward, especially given that, as we know, the Aramco deal is coming to the market and expected to price today? Obviously, there is pressure on them to keep the price floored, but then equally there's pressure on them to keep the oil revenue coming in.
There is. Saudi Arabia is in the hot seat, but has been for many, many years. Since the cuts were started around about 2016, Saudi Arabia has continued to bear the brunt of those cuts, and I think it's inevitable that they will have to do so. So out of the promised cuts, Saudi Arabia is contributing around about a third. I think they are taking the greatest amount of pain, but then they have the greatest to gain probably from maintaining the price, and they see that it is critically important to keep the OPEC plus alliance together. And if that means that they have to contribute a bit more than they've promised in order to get anything out of the others in terms of cuts, so far they have been willing to do that, and I think they will continue.
Certainly something to watch out for when we get the meeting results shortly coming up today. Thank you very much for your time, sir. That was Spencer Walsh, the Director of Oil Markets and Downstream at IHS Markit. And of course, Neil Wilson, thank you very much as well. You're staying with us for the next 45 minutes. Neil Wilson, the co-CEO of EJF Capital.
So just to bring you some data out of the UK, we've watched these numbers relatively frequently as yet another canary in the coal mine, potentially. We're looking at new car registration numbers for the UK year on year for the month of November. They're down 1.3%. That is a lot less than they were down last month, when the October number was negative 6.7%. But clearly the demand for auto registrations, new cars here in the UK, not picking up just yet. Coming up on this program, Caring looks to the slopes as the luxury sector prepares for further consolidation. We'll tell you what we're talking about after this break.
The flock blindly falls into formation.
There's a growing threat from Moscow Center, and Britain's intelligence service think they found the man for the job.
The natural-born agent runner is his own man. He may take his orders from London, but in the field, he is the master of his fate and the fate of his agents.
A powerful portrait of our times, told with unflagging tension by one of the greatest novelists of our age, John le Carré's Agent Running in the Field. Available now at Waterstones.
When Harlequins take on Leicester Tigers, it's always a big game. But this year, it's the big game. Hosted at Twickenham, you can expect fireworks on the field and off it. Pre-kick-off, enjoy music, entertainment and a truly incredible atmosphere. Then watch two Gallagher Premiership rugby giants go head-to-head. Tickets from just £17 children, £27 adults. Go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols and OMGs. Wear laughing emojis on actual smiley faces. Batteries running low? Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Welcome back to Street Science. Well, let me take you to see some of the price action this morning. You can see right behind me, it's a bit of a mixed bag for European indices, half trading in the red, half in the green, as the handover from Asian equities was somewhat mixed as well. Lots of confusion about the future of these trade talks and whether or not the two sides are actually close to an agreement or not, but certainly keeping investors on edge when it comes to the overall trading narrative. But right behind me, you can see the FTSE 100 in the UK is down about 20 points, about 0.3 percentage point. It hasn't been a very good couple of days for the UK index, partially explained by the big bounce that we're seeing in sterling pound. The currency is trading north of 131 this morning, continues its climb higher, and obviously that's impacting the FTSE 100, very export-oriented index. So right at the bottom, we've got property funds, though, today, with the M&G announcing the closure of their £2.5 billion property fund overnight. That's impacting the FTSE 100. Zeta DAX in Germany down about 0.3 percentage points. Here we had some weak German factory orders this morning coming in at negative 5.5% year on year. The domestic numbers negative 3.2%. So this after some positive signs in September. Looks like the month of October was back to some weak manufacturing and factory activity, and that's also weighing somewhat on the DAX this morning, down about 0.25 percentage point. CAC 40 in France up 0.3 percentage point. And here we're going to talk a lot about what's been happening in luxury space, but I just want to turn your attention as well to political developments. Today is a very important day for France when it comes to protests. The biggest strikes expected in years on the streets of Paris and metropolitan cities. This in protest of potential pension reform put forward by the French President Emmanuel Macron. So something to keep an eye out for on the political front. In terms of sectors, let's break it down for you. And you can see today that right up at the top, we've got retail, utilities doing well. Not shown here, but we do have luxury stocks, many of them performing very well. Moncler up about 10% on the open on talks of Kering's potential takeover of that company. We're going to talk about that in just a moment. At the bottom, we've got chemicals down about 0.5 percentage point. Travel also down 0.4. And here, Ryanair is one of the names that we're looking at this morning. A bit of an abysmal outlook for next year, and saying that they've been impacted by the delay of the deliveries of the Boeing 737. Scandinavian Air, also one of the airlines that's struggling this morning. Telecoms down about 0.1, and then auto is down 0.1 percentage point. We were just talking about the somewhat disappointing car sales in the UK today. This on the heels of disappointing car numbers in Germany yesterday. Willem.
Well, as Joanna just mentioned, one of the shares that we're watching this morning is the skiwear maker Moncler. They've surged after Bloomberg reported that Gucci owner Kering had held exploratory talks with the Italian company. The report said discussions are at a preliminary stage. Kering declined to comment on the report to CNBC. If you look at the luxury sector across Europe this morning, you'll see there's been a very positive reaction from all of the rivals at the moment. Even Richemont, which just a few moments ago was trading in negative territory, is up slightly around 0.1%. Salvatore Ferragamo up more than 5% this morning. And clearly the discussion about further consolidation and M&A in this sector is having a beneficial impact on some of these share prices. Our colleague Charlotte Reed joins us with more details about this. So Kering's not commenting on this possibility to CNBC just yet, but what might make sense about this potential tie-up from their perspective?
Well, look, they have been relying on Gucci heavily, Kering. It's about 50% of their revenue. So Gucci as a brand is having a soft landing at the moment. There is a slowdown there for that brand. And so they've been trying to diversify. And Bottega Veneta has been one of the brands I've been trying to develop as well. Balenciaga. And so it would make sense for them. You know, they're looking for these new brands. And Moncler, in that sense, is one that would make sense. It's an Italian brand, which also corresponds to the Kering portfolio of brands. I have a lot of Italian brands here. And it's also, you know, the this consolidation that we've seen just recently with LVMH and Tiffany's, all these big luxury groups like Richemont, Kering were on standby to, and the standalone brands, luxury standalone brands, as Burberry, or you had Ferragamo, Tod's, and Moncler, were some of these brands that were seen as potential targets for takeover. That's why we see these stocks higher today.
Charlotte, isn't there some element of cannibalization? Because Kering, within the Gucci brand, they obviously have their own ski wear collection, a part of their other portfolio as well. They're already producing it at the luxury level. Why venture into Moncler? What is the value added there, given that they're already quite successful in that domain to begin with? It's not like in the case of LVMH Tiffany, where obviously they're branching into a new geography, they're branching into a new sector.
Well, because one, the luxury skiing wear is actually doing very well. It's a trend that is growing very fast, in particular in the US market. So that's something, a field and a market that they want to expand into. And as you say, it is a sector that is doing well. And for Kering, they want to develop. Moncler has a very single offer compared to other luxury groups. This puffer jacket that is very recognizable. Is that a good or bad thing for them? Because it's a one type of product kind of brand, but also makes them very, very one-off kind of brand. And they're having a momentum. They have these collaborations, have been doing very well lately. As a brand, they have been developing the strategy of collaborations with new designers. So they have been doing really well. So in that sense, Moncler stand out a little bit of the loss compared to these other standalone luxury groups.
Yeah, it gives them the ability to scale up, essentially. Charlotte, thank you for breaking it down for us. A very big day for luxury stocks. I just want to bring you some news as well. Don't forget, there's also a Eurogroup meeting taking place in addition to the OPEC meeting. Very busy week this week. We've just heard from the Eurogroup head, Mario Centeno, and he has said that they have reached an agreement in principle on the package on ESM reform, but the changed ESM treaty will not be signed until the first quarter of 2020. There was some expectation that this signed treaty or the signing of the treaty could get put in motion today at today's meeting, but there's been a lot of resistance from Italy, particularly when it relates to those collective action clauses and new elements that are being put in there, and the Italian government saying that it would put Italian bonds on the back foot and at a competitive disadvantage. So this is an ongoing story between the SM, the rest of the Eurogroup, and Italy, something to watch out for. But Mario Centeno says he is expecting that new treaty to be signed in the first quarter of next year. Now, coming up on Street Signs as well, we're going to cross back over to Vienna, where we're awaiting comment from key oil ministers. More on that just in a few moments.
Hello, I'm Mike Lindell, inventor of MyPillow. Just like you, I had problems sleeping.
Christmas, a time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroëns excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
Hey, this is Paul in the Knock at TuneIn. Thank you so much for listening to us this holiday season, and I hope you have a great holidays and a happy new year. Just wait till next year. We got bigger and better things coming. Just you wait.
It's Liz Hernandez with your TuneIn Music News Update. Taste of Country convinced a bunch of country stars to recite "'Twas the Night Before Christmas." We're talking Luke Bryan, Trisha Yearwood, Low Cash, Gone West, Kelsey Ballerini, Little Big Town, Chris Young, Michael Ray, and so many more. You can check it out now. Meanwhile, RollingStone.com has a 12 Things We Learned from the Garth Brooks The Road I'm On documentary, available now online. For more country music, head over to Country Roads, exclusively on TuneIn.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Welcome back to Street Signs. I'm Willem Marks.
And I'm Joanna Versace, and these are your headlines.
It's a live meeting, say OPEC watchers, as Reuters reports that a main scenario for discussion among oil producers is a 400,000 barrel a day supply cut.
Investors eagerly await the pricing of Saudi Aramco's IPO, with the oil giant's bookrunners reportedly recommending a price at the top end of the range, making it the world's biggest public offering.
And a possible sale on the slopes. Moncler shares surge after a report that Gucci owner Kering is eyeing a takeover. Other possible luxury targets also get a boost amid this catwalk consolidation.
And turbulence ahead. Shares in Scandinavian Airlines are sharply lower as the Swedish company misses full-year targets, while its CEO tells CNBC he expects a rough year to come.
We are forecasting a rather challenging year for 2020, where the outlook in terms of EBIT margin is designed at 3 to 5%. So, of course, there's more work to be done.
Welcome back to the program. Huawei has launched a legal challenge against the U.S. Federal Communications Commission after its move to block access to a government subsidy program. The Chinese tech giant says the action is unlawful and insists that U.S. authorities have, quote, tried to spread fear about the company. Our Beijing reporter Eunice Yoon filed this report from the Chinese capital.
Huawei believes that the FCC's designation of the Chinese telecom giant as a national security risk is unfair and is mounting a legal challenge to overturn the ruling as unlawful. The Federal Communications Commission voted last month that Huawei and its local rival ZTE were threats to the U.S. because the commission believes the companies have ties to Beijing and its military and are under pressure due to Chinese regulations to assist with intelligence gathering. Huawei says the FCC doesn't have the evidence, and this is what the company's chief legal officer said at its headquarters today.
When passing this decision, the FCC did not offer Huawei to possess or verify the facts, but they very loudly and very publicly labeled our company as a national security threat. The FCC's order violates the Constitution, and we have no choice but to seek legal remedy.
The FCC decision bars Huawei's U.S. customers in rural areas from tapping an $8.5 billion government fund to buy Chinese gear. The carriers are also required now to remove and replace Huawei and ZTE equipment from their existing networks. The petition is the latest example of a new strategy by Huawei to more aggressively use legal means to defend itself overseas, in addition to its ramped-up PR campaign. The Huawei case could cast a shadow over the already strained U.S.-China trade negotiations, though officially both sides have said that they want to keep these issues separate on different tracks. Eunice Yoon, CNBC Business News, Beijing.
And just another angle to consider in this ongoing trade war. Let's bring in Neil Wilson, the co-CEO of EJF Capital, who has been with us around the desk for the last half an hour or so. In our last segment, you were talking about the optimism that you had, particularly for domestic-focused industries in the U.S., somewhat immune to some of these external headwinds that are at play. Speaking of the trade war, there has been a deterioration in sentiment the last couple of weeks, and it certainly seems increasingly less likely that we will get a phase one deal. If that's the case, then new tariffs come into play on December the 15th, and those tariffs will perhaps be more impactful when it comes to the U.S. consumer, because it's targeting a whole new wave of products that would directly impact the U.S. consumer purchasing power in the U.S. Earlier on, you were talking about the strength of the U.S. consumer. How will these December 15 tariffs affect your view of the U.S. consumer and subsequently the U.S. economy in 2020?
Well, it'll certainly have an impact, there's no doubt. But I think you really have to look at the trade war and the positioning of Trump and the administration through the political lens, the domestic political lens. So Trump, obviously, we're heading into an election year, and you have within the White House, you have the hawk, the Lighthouser U.S. trade rep view, and then you have the Treasury Secretary Mnuchin view, and maybe the Jared Kushner view, which is much more dovish, because they want to be able to, at the one hand, look tough, because the election will be decided by just 6 or 7 states, many of which are in the Midwest part of the United States, which are actually very strong on being difficult to China and trying to run a hard deal and look tough. Then you have the dovish view, which is, hey, we want to show that, as a guest said last hour, the president is a transactional president. He wants to show that he's the deal maker, he's the negotiator, and that's part of also his selling point politically. So those are the dynamic and the tension. So the real question is Trump trying to wait until next year to cut a deal, or is he trying to cut something before the end of the year? We would think it's really going to be really small odds that anything gets done before December 15th. And we think that he will try to look like, declare victory. This president's very good at declaring victory, that he will try to do that next year, because that really plays to some of his strengths. Meanwhile, Congress is not being helpful, right? You have the Hong Kong Human Rights and Democracy Act that president's kind of forced to sign. And then now yesterday you had the House pass the Xinjiang Uyghur kind of
sanctions on Chinese officials involved in those detention camps.
Correct.
So, it was this week for the first time really that President Trump publicly talked about the idea of this deal not happening until after the election.
Right.
You always have to take what he says with a pinch of salt, and especially when it comes to these trade negotiations. You talked about the tension inside his White House between hawks and those who are slightly less aggressive when it comes to China. What about the differences between him as the Republican candidate versus some of the Democratic candidates? We're 11 months away now, almost exactly to the day from that election. How different do you think these discussions with China will be if there's a Democrat in the White House?
That's an excellent question. And I think that's somewhat misunderstood here. People just view it as Trump being difficult with China and taking them on. But he has somewhat successfully changed the narrative in the United States. The Democrats are actually very supportive of being tough on China.
Hence these bills getting through the House yesterday, for instance.
Absolutely. That's the proof positive. And we think that even if Trump loses the election, which we would kind of, right now you would say that he is it's kind of his to lose depending on where the economy drifts to next year. But if a Democrat won, no matter who it is, whether it be Warren, whether it be Biden, they're going to take a very strong stance, because labor, for example, organized labor, is very strong against China. And if the Democrat wins, they're going to be successful again in those Midwestern states, Ohio, Wisconsin, Michigan, Pennsylvania. So they're going to have a constituency they need to answer to, because that's where the election's being decided over the next, in 2020, but also most likely in 2024.
What does that mean for the Fed? Because you could argue that the reason the Fed became more proactive this year was because the economy started to hurt on back of this trade war, and you saw that in the ISM data. Even recently, it hasn't fully recovered. Manufacturing is definitely on the decline in the U.S. So they were forced to cut 3 times, do this mid-cycle adjustment. How does the outlook look going into 2020, and how do you think that changes with a Democrat president?
No, that's also an excellent question. I think the Fed, we believe next year will probably most likely take no action. And Jay Powell, the chairman of the Fed, has pretty much messaged that there's probably not another cut unless there's really some precipitating event that would really require it. So how would that change under a Democrat administration or a new presidency? I think that, look, I mean, the Fed really wants to be data dependent. It did get a little bit bullied by the market, and not so much by Trump, but really by the market is what we would argue. And we think that, look, growth next year in the United States, this year it's going to end up, 2.1% GDP growth. Next year, 1.8 is kind of the consensus, but in the first half of the year, it's expected to be lower than that. And so that is the argument why the Fed would be probably more likely to cut as opposed to, be pushing the rate up.
Yeah, we'll leave it there for now. We'll come back to you in a few minutes, if that's okay. Thanks so much for your patience. Neil Wilson is the co-CEO of EJF Capital. And moving back to oil, OPEC's Joint Ministerial Monitoring Committee, a conference I should say, will be kicking off pretty soon. Reuters has reported that a deeper supply cut is the main scenario up for discussion, and that would represent more than 400,000 barrels a day. There's some comments that have just hit the wires from the Nigerian oil minister saying his country has now hit 100% compliance with these cuts that elsewhere have been going on for quite some time. He's also saying that he will meet with his Saudi counterpart to discuss possible further cuts. Our colleague Dan Murphy joins us now from Vienna, where that OPEC meeting will be taking place today. And Dan, surely the fact that the Nigerians are now in line with some of their counterparts will be seen as another example of OPEC working together and presumably encourage some of its members to consider a further cut.
That's exactly right, Willem. Hello again. We're outside OPEC headquarters, and you can see just behind me there's more and more people arriving now for the start of this meeting. You can see there's some television lights, also the black Mercedes vans that are carrying support staff. Usually the ministers arrive in the black S-Class Mercedes cars, so keep watch on that. At the same time, though, coming into this meeting, as you were just pointing out, we have heard more now from ministers, including the likes of the Nigerian minister, who say they are improving compliance. That's going to be a major focus in the building behind me because compliance has been a significant issue. On the one hand, the Saudis would certainly like to see improved compliance from the likes of Nigeria and also Iraq, who have been key laggards to the overall OPEC deal, but also Saudi Arabia itself, which has also been shouldering the majority of the burden for this production cut too. The question now is, will they or won't they? So far, the talk is that, yes, we will see some kind of deepening in the overall production cut, perhaps in the order of about 400,000 barrels. But whether or not that eventuates is still really up in the air. The Iraqi oil minister weighing in on CNBC exclusively just yesterday saying that he does believe a 400,000 barrel cut is necessary to stabilize the market. And earlier this morning, I spoke with RBC Capital's Halima Croft, an OPEC watcher. She said that message isn't necessarily coming from the Iraqis. In fact, it's coming from the Saudis. So if that is true, it would mean that, yes, the idea is now firming up that we will see an additional cut. So that's going to be interesting to watch. And at the same time, the other thing to look out for here is the first expectation coming into the meeting, which was for an extension of the OPEC supply deal. Analysts are still split on this issue. The question of whether or not we're going to see that deal being extended out to June of 2020 or in a best case but less likely scenario until the end of 2020. So a lot to look at as we come into this meeting here in Vienna. I think the other thing to point out is what has happened with oil prices already. If Saudi Arabia was perhaps looking for a sugar pop in the price of oil to help along the Aramco IPO, then it certainly got it yesterday. Prices up 4% on talk of a deal extension and possible deeper cuts. However, we have seen oil prices just coming off the boil, perhaps some profit taking here coming into the meeting, and certainly looking for their next catalyst at this point as well. Back to you.
Dan, thanks so much. Get yourself in somewhere warm as well. Dan Murphy there outside OPEC headquarters in Vienna. Well, shares in Scandinavian Airlines, they're sharply lower after the Swedish-based firm said an improved fourth quarter would not be sufficient for it to meet its financial targets for the fiscal year. The firm's also predicted that growth will continue to slow further in 2020. It blamed increased fuel costs, some strike actions, and weaker Swedish and Norwegian currencies for those challenges. Coming up on the show, France braces for transportation delays as a nationwide strike begins. We'll bring you details on that after this break.
Do you have concerns about mild memory loss related to aging?
This winter, there's no place Like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
Get your home ready for Christmas. At littlewoods.com, you can order selected sofas, beds, and dining room furniture now and get them delivered in time for Christmas. Perfect for welcoming all of your guests. All with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com. Order by 19th of December.
So, Minister, do you really think you can lower taxes and increase funding for the NHS?
Get an in-depth look at all the party's spending promises. From the NHS to house building, the Times and the Sunday Times will guide you through. Pick up your copy today or visit thetimes.co.uk.
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes NI.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroëns excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
Welcome back to the programme. There was a gathering of NATO leaders just north of London yesterday, and it ended last night in much the same way as it began. Division and tension between member states very much on public display. President Trump returned to Washington without participating in a final press conference, as had been scheduled. NBC News' Christian Walcott filed this report on the day's events.
Tonight, while other world leaders were holding closing press conferences, President Trump was leaving London in dramatic fashion, abruptly canceling a planned news conference, surprising even his own staff when he announced the news himself.
There's no reason to have press conferences because we've had about 8 of them. So I can't imagine you'd have any more questions.
The move came after stunning video emerged overnight. Some of America's closest allies caught on video at Buckingham Palace mocking him. In one part, Canadian Prime Minister Justin Trudeau, who met with the president for over half an hour Tuesday, can be heard venting about someone's tardiness. The president took aim at Trudeau when asked about the video today, noting he had criticized Canada for not contributing more to the NATO defense budget.
It's too fast.
You think that Germany is too naive?
And honestly, with Trudeau, he's a nice guy. I find him to be a very nice guy. But, you know, the truth is that I called him out on the fact that he's not paying 2%. And I guess he's not very happy about it.
And later, Mr. Trump appeared to compliment himself for that remark in comments that were captured on audio.
That was funny when I said the guy's two-faced.
For his part, Trudeau tried to downplay any divisions.
Last night, I made a reference to the fact that there was an unscheduled press conference before my meeting with President Trump, and I was happy to take part of it. but it was certainly notable. And I've had a number of good conversations with the president over the course of this day and yesterday.
For President Trump, the trip was aimed at turning the page, at least temporarily, away from the impeachment inquiry, but instead sparking new controversies on the world stage. And President Trump defended his relationships with those NATO leaders, tweeting from Air Force One he got along great with them and there is only deep respect. He returned to the White House late Wednesday night. Back to you.
Let's bring back in Neil Wilson, the co-CEO of EJF Capital. And I know that financial investors typically wouldn't pay a lot of attention to a NATO summit, but there were multiple press conferences yesterday and the day before by the U.S. president. Is there anything for you that stood out that would materially affect the way you're thinking about investing or putting your money in the next couple of months?
Well, my observation as an American and watching the political system is that video that came out really plays into Trump's hands, because it gave him an opportunity to point out that he's tough and he's demanding the 2% NATO contribution. Whether it's realistic or not, he just wants to look tough. But when you talk about what we're focused on the consumer. And we just think that if you're going to invest in a market that was up 24% last year, the NASDAQ was up 29%, S&P up 24, NASDAQ up 29. Where do you look? And for our perspective, if you're looking in the financial space, which is where we operate, we're looking at consumer credit. And what we're looking at is really market and structural dynamics, and also a regulatory catalyst for investing in consumer credit. We would say mortgages are a particularly interesting area. After the crisis, Dodd-Frank created the Consumer Finance Protection Bureau. That was Elizabeth Warren, one of the presidential candidates. Her child is essentially from a regulatory perspective, and it created a market for qualified mortgages that really. That's what backstops the Fannie Mae, Freddie Mac, and Ginnie Mae. Those are the GSEs. And so both parties agree that footprint of having the government backstop mortgages should be receded, that it should be played out, and the private mortgage market should grow into that. So we're viewing non-qualified mortgages that are not going to be securitized by the GSEs. That's going to be a growing area. So Citigroup, for example, came out and said we had $15 billion of non-GSE securitized mortgages. Next year is going to be $30 billion, and the year after that will double again. And why is that? It's because there is a supply-demand dynamic, not unlike here in London, where you have 15 million jobs were created since the crisis and only 10 million housing units. You have the housing prices have gone up, and you have a consumer who's doing quite well. 3.6% unemployment, 50-year low. You have wage increases, so you have a strong consumer, as evidenced by my statistics on Black Friday, Cyber Monday. They're going to be buying homes. And so when you look at buying a mortgage where rates are low and they're not going to refi, you have a longer duration kind of mortgage-backed security that you would like to invest in. So that's what we view as a way to play a really tough situation where the market is ripped and the consumer credit is strong.
Well, I want to unpack your hypothesis a little bit, because we've also spent a big part of 2019, talking about the possibility of a U.S. recession. And remember, the yield curve inverted at some point. It's back up to positive territory. Surely, if you are investing into those areas of the mortgage market, that must be a huge risk for you, especially given how late we are in the cycle.
No, I think that's of course, the argument on the other side. But you just had you had a Fed that actually reacted quite quickly, 3 cuts, and usually the impact of that usually takes 6 months. So we actually do not believe 2020 is going to be a recession. Yes, there are challenges, and you pointed out, Germana, earlier, that the PMI for manufacturing was at 48, and that's the 4th month in a row where it's under 50. So it's in recession in terms of manufacturing spend. But we do think that the consumer economy of the U.S., 70% plus, really is going to be an interesting place to play. And we think the fact that the government wants the GSEs to have less of a footprint, both parties agree that will be true whether Trump wins re-election or not. We think that, and the consumer strength, we think that really bodes well for consumer credit.
Okay, we'll leave it there. Neil, thank you very much for joining us in Street Signs today. Neil Wilson, the co-CEO of EJF Capital. And also, speaking of U.S. politics, do not miss CNBC's exclusive interview with Joe Biden later today. The former vice president is currently leading in Democratic primary polls, so that is happening later tonight on CNBC Exclusive. Now, French commuters are braced for widespread delays ahead of a nationwide strike of public sector workers. The walkout is intended to halt much of the country's public transport system. Trade unions say they want to stop the Macron government from introducing major pension reforms. Charlotte is back with us, this time talking about the strikes. Jacques Chirac, almost 25 years ago, tried to do the same thing. He unleashed a couple of weeks of massive demonstrations in the country, and then he backed down. Do we have any signals that these types of demonstrations will be different from what happened 25 years ago? And indeed, how will the government likely respond?
That's the question. It's the Pandora box of French politics. Pension reform, always a tricky one. So Emmanuel Macron here is taking on a challenge, especially given the protest that we saw with the Gilets jaunes about a year ago. That was part of his program, so it's not a surprise. He's carrying on with his program. As he said, I'm sticking to my agenda. But all in consultation. The government is becoming out with this word again and again, consultation. They'll be talking to the unions. But yes, there's this strike today, no transport in Paris and in several cities in the country. It's an indefinite and preemptive strike because actually we don't know what is going to this pension reform. All we know is that the Macron government wants to put under one centralized system instead of the 42 different pension regimes that we have at the moment for train workers, Paris transport workers, even the Opéra de Paris workers have a specific regime, EDF. There's all these differences, so they try to put it under one centralized system. There's a protest this afternoon. There's concerns of violence as well. So there's about 6,000 police in the streets, so we'll keep an eye on all that. The public opinion is in support of the strikers at the moment. About 55% say they're in favor. But again, if this carries on over 2 months like we saw in 1995, then things could change. But there's a real challenge for Emmanuel Macron. Does he stick to his agenda? Does he cave to the pressure? This is real existential and a real test for his agenda and his reform drive.
Really quickly, I mean, do you have a sense, do we know what this means financially for these individuals who are seeing their pensions change? Does it mean they work longer? Does it mean they get less money at the end of it?
Well, to give an example, the general system of pension is 62 years, best 25 years. If you compare to the RATP, which is Paris Transport, is retiring at 52 to 57 years old with the last 6 months for calculation of this pension. So big discrepancy that all comes from the same pot of money. So that's why they want to try to correct these differences. And the pension system for the moment is balanced, but will go into deficit as the baby boomers retire. That's why they want to tackle it now, before the cliff edge.
Sounds extremely complex and not an easy decision for any government to make. Charlotte, we'll keep an eye on those demonstrations. Charlotte Reed, our French correspondent. Quick look at U.S. futures. Yesterday, we bucked the losing trend of the prior 3 days with the indices closing up in the green. Looks like it is going to be another positive session for the U.S. But that is it for Street Science today. I'm Joanna Versace.
And I'm Willem Marks. Thanks for watching. Worldwide Exchange is coming up in just a moment's time.
Hello, I'm Mike Lindell, inventor of MyPillow. Just like you, I had problems sleeping.
At Lidl, we're big on the sweetest Christmas and those happily ever afters. Like our winter warmer deluxe mince pie strudel at just $2.99. And our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
Running down the sideline.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
It's Liz Hernandez with your TuneIn Music News Update. Contact Music claims Louis Capaldi is canceling concerts because of vocal cord issues. If he performs, he could cause permanent damage to his throat and cords. Someone else who's been on a leave of absence from the stage is Shawn Mendes, and he recently walked out on a hotel balcony in Brazil in his black boxer briefs, and fans went wild. To hear more music from Shawn Mendes and Louis Capaldi, search today's hits on TuneIn.
NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline, into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Going for two stocks trying to make a comeback on upbeat trade news, but can futures gains hold through that opening bell? Taking it to the courts, Chinese tech giant Huawei unveiling a new legal challenge against a U.S. blacklist. We are live in Beijing with reaction there. M&A under fire. A new bill from Elizabeth Warren making the rounds in Congress that could target years of multi-billion-dollar mega mergers. OPEC very much in the spotlight as energy ministers descend on Vienna, Austria for what some are calling the most interesting summit in years. Our own Brian Sullivan is live on the ground there. And then call it an amazing turn of events as disgraced hedge fund manager Steve Cohen is reportedly heading to Queens as Worldwide Exchange begins right now. I'm Dominic Chu in this morning for Brian Sullivan. First off, we've got breaking news out of the European Union. New growth figures for the region coming in just moments ago. Our own Jumana Bersecci is live in London with those numbers. Good morning, Jumana.
Morning, Dom. So this is the third reading that we've had for the Eurozone third quarter GDP, and it has been confirmed at 0.2% quarter-on-quarter, 1.2% year-on-year. This is in line with initial estimates. I also just want to tell you that we've got the retail sales numbers for Eurozone as a whole. Those came in much lower than expectations at 1.4% year-on-year versus expectations of 2.2%. So putting it all together, you could say that the picture for Europe has been somewhat dimmed by weaker retail sales and, of course, the global trading environment. And one of the economies that we're looking at very closely, of course, is Germany. The numbers there, exports and trade, have been moving in lockstep with global trade and global manufacturing activity. You may remember, though, that in the third quarter, Germany managed to skirt a recession, coming in at 0.1% quarter-on-quarter versus expectations at the time of a drop to the tune of 0.2%. So even though the numbers are not great, we can still say for this time being that Eurozone is averting a recession, and not least that country in particular, Germany, is one that global markets have been very much focused on. Just taking a quick look at how global markets are doing today, the picture is somewhat mixed. We had weak German factory orders this morning for the month of October, coming in at minus 5.5% year-on-year. So still not a pretty picture for manufacturing, but France, Italy still in the green today. Worth mentioning as well, keep an eye on the political developments in France. Very big demonstrations expected this afternoon on back of proposed pension reform that is being put forward by the President Macron. With that, I'll hand it back to you.
And of course, everything happening with the pound and the Brexit and the the election in the UK and everything else. So much action in Europe right now. Thanks very much, Jumana Bersachi, live in London for us. Now, back home here stateside, stock futures hinting at some more moves higher. This after the major averages yesterday reversed a 3-day slide. We are still off the record highs here, but you can see the Dow Jones would open up by about 60 points and the S&P by about 6 and the NASDAQ by about 18 if these futures moves hold into regular cash equities trading. On the bond market side of things, relatively stable for yields, maybe a slight tick ever so higher or lower in this case here. The 10-year note yield 1.78% and the 2-year Treasury note yield 1.58%. Overnight in Asia, a predominantly positive trading session overall. You take a look at there, the Nikkei in Japan up 0.75%, the Shanghai Composite up 0.75%, the Kospi though in South Korea off 0.5%. Now, speaking of Asia, in Japan, Prime Minister Shinzo Abe launching his country's first mass fiscal stimulus since 2016 with a larger than expected $121 billion package to help repair storm damage, upgrade infrastructure, and invest in new technologies. It's described as a 15-month budget. The spending package is one of the largest since the financial crisis as the island nation now works off to fend off a global economic slowdown. You can see there those moves really helping the Asian markets. Now, General Motors and South Korea's LG Chem are reportedly ready to announce a 50-50 joint venture in Ohio today to make electric vehicle batteries. According to Reuters, the facility is expected to be located in the Lordstown area and will see investment of more than $2 billion. GM shares up 1% pre-market. LG Chem shares in Korea down. And new comments this morning from China's Commerce Ministry following yesterday's bullish report on trade talks. Officials now saying tariffs must be rolled back as part of any trade deal and that the two countries remain in close contact with each other. New this morning as well. U.S. Senator and Democratic presidential hopeful Elizabeth Warren reportedly drafting a bill that would call on U.S. regulators to retroactively review about 20 years worth of mega mergers and ban such deals going forward. That's according to a report from Bloomberg. CNBC has confirmed several details of Warren's draft antitrust proposal, including a ban on mergers involving a company with over $40 billion in annual revenue, a ban on merging two companies with at least $15 billion in annual revenue apiece, and allowing gig workers to actually unionize. Right now, there is a small chance this bill could be introduced by year's end, but more likely punted towards 2020 as Warren works with Congressman Cicilline, the head of the House Antitrust Committee, to introduce that legislation. Now, no comment from Senator Warren's office formally, but still, it's making its way through the rounds, causing a lot of buzz. So joining me now in a first on CNBC interview is President of Americans for Tax Reform, Grover Norquist. Grover, good morning to you. Thank you for the early wake-up call. Let's talk about this tax policy. Yeah. Is this one that has any shot, really, of making its way through Washington and eventually to the president's desk?
Well, this new proposal she has to retroactively go back and undo mergers, this is called an ex post facto law. And it's one of the things in the Constitution, which Mrs. Warren has not read, evidently, that is specifically forbidden. She also wants a wealth tax, which also is forbidden by the Constitution. So she's going to have to amend the Constitution a lot or ignore it. And my guess is she won't be able to do either.
Now, when you say it's unconstitutional, obviously, I mean, we know that
the Constitution says you can't have an ex post facto law. You can't go back and hang somebody for something that wasn't illegal before.
Fair enough, Grover. My point being, if there is such an overt and just blatant anti-constitutional aspect to it, how is it that certain politicians out there can float these types of proposals and still get any kind of traction whatsoever, or is this strictly just a public relations stunt?
Well, it's a public relations stunt, but it says, I hate mergers, is her message. The numbers she has, the $40 billion in sales, no mergers beyond that. I mean, what decade does she think we're living in? How large does she think international companies are? You know, we're not living in a time with small companies competing in the world. American leadership has larger companies. It's really an odd 1910 worldview and 1910 numbers, not American modern numbers of a significant international company.
There is a certain, though, reason why these particular topics are gaining a lot more traction these days. I mean, when I say a lot more, it's a relative basis, right? We weren't talking about this that much before. They're very much in the forefront of this presidential cycle now. Is there anything that can be done to address some of the concerns that folks like Senator Warren or Senator Sanders have about this kind of environment corporate-wise that doesn't infringe on our constitutional rights as Americans?
Yeah. Look, the most important thing that we did was we took the corporate rate from 35% down to 20%, and we went to a regional-based, nation-based tax system rather than a worldwide system. So we're no longer double taxing American companies overseas, and it's no longer of value for foreign companies to buy American companies and make them more valuable simply because they're no longer in the United States. It was our own tax policy that was driving mergers of American companies out. People like the Democrat frontrunners used to complain about that. They were responsible for it with the tax policy they supported. When we undid that, we haven't had American companies fleeing by the hundreds or fleeing or being purchased by the hundreds because we no longer have a worldwide tax system in the same way and a 35% rate. The two together were what was so damaging. So there's lots we can do, taking the rate down, stopped mergers out of the country, firms being bought by other companies, and they're actually more likely to move in the other direction, which is good for the United States and good for the world economy.
It's certainly a hot topic for sure, one that's going to gain a lot more momentum, I'm sure, in the next presidential cycle here. Grover Norquist, thank you very much for joining us this morning with your thoughts on all those taxes. Well, watching crude ahead of today's big OPEC summit in Vienna, Austria, where leaders of oil-producing nations will discuss deepening crude production cuts by more than 400,000 barrels per day. That's according to those reports on the ground there in Vienna. That is where we find our own Brian Sullivan, as we often do at OPEC meetings. Good morning, Brian. Let's talk about what's happening with this meeting. It's OPEC today, and then OPEC and company, OPEC and friends, ROPEC, whatever you want to call them, tomorrow, right?
It certainly is, Dom. You nailed it. And I'm going to call it the Oscars of oil, if you will, because people coming up on the sort of the red carpet. I believe we may have the Saudi delegation showing now. The meeting is just about ready to begin. And you can see that there's, the Iranian is, nope, there we go. We actually have somebody departing the meeting now, which is unusual because the meeting just began. I don't know if that's a sign that there's more conflict internally than we expected. I did not get a good eyeball on exactly who that was. I believe it was Iran, but I'm not 100% sure, Dom. But the fact that one of the delegates just left the meeting when the meeting just started 10 minutes ago, we have heard that this could be what they call a live meeting, where it is not, the outcome is not predetermined. If you are an oil market watcher and you see one of the OPEC members leave 10 minutes after the meeting began, you can read what you will. All right, let's go into the storylines. We'll try to get more information on on what exactly just happened there. All right, key storylines. The expectation coming in was this is not going to be an eventful meeting. 1.2 million barrel a day cut. That's what they already have. They're going to continue that for another 3 to 6 months. 3 or 6 months was the only thing up in the air. Last night, all the reports came out that maybe they would do deeper cuts, longer cuts, or a combination of both to counter the increase in production from Norway, Brazil, and of course the United States. This is the first meeting with the new Saudi energy minister, who's one of the sons of the king. It is the first meeting where Aramco will become a publicly traded company officially. They're going to price today. They'll begin trading on December 12th. And of course, Tom, all of this is in the backdrop of a U.S. oil and gas industry that is saddled with hundreds of billions of dollars in debt. Many companies' stocks down 50, 60, 70% because they have almost no free cash flow. And they are hoping that OPEC, inside this building, along the adversary of the U.S. oil and gas industry, may be able to firm prices up to a point where some of these companies, Dom, can start to make a little bit of money, and maybe the U.S. oil and gas industry can recover just a bit. OPEC actually could, in some weird way, be the hero for the United States.
So Brian, you mentioned the United States prominently here, and obviously the U.S. is the biggest petro kind of chemicals and petro products exporter out, or rather producer out there. How much of a topic of conversation is the U.S. oil production picture at this OPEC meeting, and will it factor into whether or not the decisions are made at this quote-unquote possible live meeting with regard to whether they extend production cuts or cut even further or deeper?
Okay, the answer is twofold. A lot and yes. I mean, you're right on both counts. Of course, everybody talks about the United States. I think I've been coming to OPEC meetings maybe 4 or 5 years now. just in that amount of time, Dom, the United States has gone from 8 million barrels a day, 9 million barrels a day, to 12.5 million barrels a day. All at the same time, when global demand year over year is flat to maybe slightly down because this manufacturing recession that we have largely in Europe. Oh, and by the way, this trade war thing, which may slow down industrial production. The U.S. is now considered not the world's price maker, but pretty doggone close. In other words, we're at 12.5 million barrels a day now. That's barrels that are going onto the market. Remember, for the most part, oil is oil. It is a commodity. Yeah, there are different types, but you get my point. If we sell more, OPEC may sell less. So their whole job in there is to try to balance out between where we're going up, and we are going to go up next year as well, by the way. That's every kind of forecast, and where they might need to come down over a longer period of time. You also have Russia. It's kind of the three-headed hydra of oil. The U.S., OPEC, and Russia. Russia will be here tomorrow, and those two groups trying to mitigate the growing influence of the United States. I'll leave you with this, Dom, by the way, $600 billion. That's the total amount of net debt that U.S. oil and gas producers have, and about $240 billion of that is due in the next couple of years. If they cannot refinance that or extend that maturity because banks are unwilling to lend and Wall Street wants to have nothing to do with it because the price of oil is flat to down, right, you are going to have a surge of bankruptcies in Midland, Texas. What happens here matters 6,000 miles away in the West Texas desert.
No doubt a lot of oil traders watching what's happening closely right now in Vienna. Brian Sullivan, we got a lot more from you coming up from Vienna, Austria. Thanks very much. We'll see you later on this hour. Yep. When we come back on the show here, why Chinese telecom giant Huawei is taking the U.S. to court. Plus, Slack CEO taking on Microsoft as that stock looks to open higher on the day. Those Slack shares up 3% pre-market. And then later on, it's luxury versus discount as two retailers battle it out for investor attention this morning. A very busy hour still ahead when Worldwide Exchange returns after this.
Payne thinks it makes the rules, but the rules just changed. New Icy Hot Lidocaine Dry Spray. Instant dry technology. No mess, no residue, fast acting relief. Rise from pain. New Icy Hot Lidocaine Dry Spray.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
The amount of people who'd love to go to space is enormous.
Opportunity. There's always opportunity. We have to innovate to win.
We think about the long term.
AI will change 100% of jobs.
Some people in negotiations, the best technique is to act half crazy.
The biggest names in business are on CNBC.
This is Chime, a mobile bank account and debit card. With Chime, there are no hidden fees, so I never have to worry about overdraft or monthly fees. Chime also helps me grow my savings automatically. My purchases are rounded up and added to my Chime savings account, helping me to save without even thinking about it. And I can even get my paycheck up to 2 days early with direct deposit. It's banking the way it should be.
Start banking with Chime today at Chime.com.
Hi, I'm Joan London. Today's senior living communities have never been better, and nobody understands your options like the advisors at A Place for Mom. A Place for Mom is a free service to help you find a place that fits your parents' budget, needs, and personalities. Call today. A Place for Mom. You know your family. We know senior living. Together, we'll make the right choice.
Call A Place for Mom to get your free ebook on financing senior care. Call 1-800-211-0451.
A A big developing story this morning. Huawei is suing the U.S. government over its latest attempt to blacklist the Chinese tech company from the American market. Frank Holland joins us now with the latest on those details. Good morning, Frank.
Hey, good morning to you, Dom. Huawei is seeking to overturn a ruling by the FCC blocking U.S. customers from tapping an $8.5 billion government fund to buy the company's equipment. Huawei filing a legal challenge late yesterday with the U.S. Appeals Court. It claims the decision by the FCC last month unfairly labels it a national security threat. Huawei says the FCC is mistaken in believing it and rival ZTE have close ties to the Chinese government and military. Washington maintains that Huawei's networking gear is a risk because it could be used for espionage. In May, the U.S. put Huawei on a blacklist, restricting American companies from doing business with it. Huawei has been granted several exemptions as some rural telecom carriers still use and rely on Huawei equipment. Huawei's chief security officer spoke to CNBC's Deidre Boza last night. He says while the U.S. has gone too far, ultimately the FCC's decision will not have a substantial impact on business.
We kind of don't need America, but we want to continue to serve our customers, and we'd like to be able to continue our partnership with our suppliers from America.
The FCC's Universal Service Fund provides subsidies to increase telecom service in rural areas and in schools and libraries. Last month, Huawei was granted a third 90-day exemption from the U.S. blacklist, allowing current customers to continue receiving support for existing products. Dom?
All right, Frank Holland, thank you very much. Still on deck for the show, why shares of Five Below are set to surge this Thursday morning, plus Kid Tech under fire, why Disney Plus, YouTube, Twitch, and more could soon come under the ire of government regulators. That's all coming up.
Fun fact, 1 in 4 of us millennials have debt we might die with. And most of that debt is actually from credit cards. It's just not right. But with SoFi, you can get your credit cards right by consolidating your credit card debt into one monthly payment. You can get your interest rate right by locking in a fixed low rate today. And you can get your money right with SoFi. Check your rate in 2 minutes or less. Get a no-fee personal loan up to $100K.
Can you customize the S&P 500 to meet your client's growth objective? Only Sector Spider ETFs can divide the benchmark into 11 investable pieces. This allows you to underweight sectors like real estate and utilities and overweight sectors like technology. Sector Spiders, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
Meeting people is my life. I had to be careful how wide I would open my mouth because I was embarrassed to show my teeth. It was time to do something for myself that was going to be permanent.
The Clear Choice one-day approach is making dental implants a reality for people all over the country who suffer from missing or failing teeth.
I felt like I was the most important person on earth to them.
Bill came in, bad teeth, discomfort, pain. We needed to get him into a smile that he felt confident in. We have expertise that you might not find anywhere else, all in one location.
The next day, I had a new smile. Couldn't wait to show some folks. It's amazing what a smile can do for a person.
Discover why this is so much more than another dental procedure. It's a true life changer. With over 30,000 new smiles and counting, we're lifting spirits and confidence all over America. Schedule your free consultation today. We'll even talk about financing options.
I'm eating corn on the cob. I had the best smile I'd ever had in my life.
Call Clear Choice today.
Okay, so today you're going to leave your phone with a guy named Flip. But it's more than your phone. It's your business, your customer data, your sales figures, and who can forget those happy hour selfies? Not Flip. This isn't working. Introducing Samsung Business Security Solutions with Knox software. With the Galaxy Note 10, you can remotely wipe data or lock phones, so your business is secure even when your phone isn't. Samsung Business Solutions.
Welcome back. Let's get a check on some of the big stocks on the move this morning. Slack reporting a smaller than expected third quarter loss. Revenues beat forecast. The company signing more large customers to its workplace communications platform. Slack growing about 20% in the quarter to more than 12 million daily active users. CEO Stuart Butterfield and most of its top customers adds some of the Microsoft products in Office 365 are some in use there. They are using Slack, though, for other parts of the business overall, like messaging. Those shares up about 3%. Now, Butterfield will have more when he joins Squawk Box for an exclusive interview, that must-see interview at 8 a.m. Eastern Time. You'll want to tune in for that. Well, shares of RH now slipping. The company formerly known as Restoration Hardware, topping earnings forecast in the third quarter, but it left estimates for the current quarter essentially unchanged. RH says tariffs aren't a big business challenge, and if a U.S.-China trade deal isn't worked out, it has the flexibility to source from many different countries. Those shares off fractionally in pre-market trading. And then shares of Five Below are jumping. The discount retailer's third quarter earnings, revenue, and same-store sales beating forecasts, helped along by the opening of new locations. Those shares up 5.5% in extended trading. Well, still to come on the show, why hedge fund billionaire Steve Cohen is looked to meet the Mets in a very big way. Plus,
today's big number, $711 billion. That's how much OPEC earned from oil exports last year.
Imagine.
Dua Lipa. See her live across the UK in May and June with Priority. If you're on O2, get Priority tickets up to 48 hours before general release right now. Search for Priority.
I'll tell you why.
Dua Lipa. Live across the UK in May and June. Unforgettable live music experiences with O2. O2. Breathe it all in. Terms apply.
Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Your holiday travels just got a lot better with a subscription to TuneIn Premium. With sports, music, news, and podcasts for the whole family. It's the gift that will really move them. Search Premium to upgrade today. NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline, into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Ho, ho, ho. Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC.
Cyber Monday rolling right along. Adobe Analytics says as of 9 a.m.
Plus music, podcasts, and live sports. TuneIn Premium brings the best in audio to you. Forget the stocking and stuff their phone with the Everything app. Give the gift of TuneIn Premium. Happy holidays.
Well, can we make it 2 days in a row? The Dow Jones is going to open up by about 56 points if these gains hold into the opening bell. The S&P by 5 points to the upside. The Nasdaq up 17 following yesterday's 146-point gain for the Dow. Can we make it 2 days in a row? Well, still to come on the show, we are live in Beijing with the latest on Huawei's U.S. legal challenge. Plus, OPEC leaders preparing for their major sit-down at 9 a.m. Eastern time today. Our own Brian Sullivan is there covering all the angles. Brian.
Yeah, Dom, thank you very much. I mean, listen, it is the first meeting with the new Saudi energy minister, who is the son of the king and also, by the way, half-brother to the crown prince, Mohammed bin Salman. It is the first meeting where we have got this overarching U.S. oil debt problem just staring us in the face, and the stocks have gotten wiped out. And by the way, the Aramco IPO, you might have heard about that. That price is today and will start trading December 12th. The Saudis have yet to show up. We are shaping up for a very long and interesting day here at OPEC headquarters in Vienna, Austria.
Imagine having whiter teeth in just 4 days. Imagine strengthening enamel while safely removing stains every day. Act Whitening Mouthwash. For a brighter, whiter smile, start Stop imagining. Start acting.
Okay, you ready?
Yes.
Now.
A Peloton? Give it up for our first time ride.
All right, first ride. I'm a little nervous, but excited. Let's do this. 5 days in a row. You surprised? I am.
6 a.m. Yay.
Rising with the sun.
That was totally worth it.
Let's go, Grace in Boston. 50 ride.
She just said my name. A year ago, I didn't realize how much this would change me. Thank you.
This holiday, give the gift of Peloton.
ServiceNow put our workflows in the cloud. This changes everything.
You're right, sir. Everything.
No, not everything. I mean, you're still blatantly sucking up to me, Gary.
Brilliantly observed, sir. Always 3 steps ahead. 6 steps ahead. 16. So many steps.
You done?
A million steps ahead.
Let's look at this again.
ServiceNow. Works for you.
Selling on Poshmark is crazy simple. All you have to do is post a picture, add a description, add a price, and you're pretty much good to go. Right now I'm selling Air Jordans and Nikes and Adidas, anything really performance related or style related.
Download the free Poshmark app now.
Ski moguls.
Welcome to beautiful Telluride. I'm Michael Bland, lead snowboard trainer at the Telluride Ski Resort. Riding in deep snow is a blast. Here are some tips for getting more pow for your buck. Transitioning from the packed snow to the powder can be tricky. When entering the deep stuff, keep the tip of the snowboard out of the snow by shifting your weight over your rear leg. Your rear leg can feel the burn, so be careful not to hold this position for too long at a time. Once you attain cruising speed, you can use your front leg to balance. To keep your flow on flatter terrain, hold your speed by making shallower turns in the fall line. Be careful where you stop. It can be exhausting getting your momentum again. Ride with a buddy, know your route, keep moving until the closing bell.
For more, go to cnbc.com/skimoguls.
Huawei launching a new legal challenge against the United States over its crackdown on the Chinese telecom giant. We are live in Beijing with the latest there. The oil industry coming together amid continued headwinds. Our own Brian Sullivan at the OPEC summit in Vienna with that sector and its plans and how to respond. And the federal government being asked to probe apparent questionable data practices by digital media companies in targeting your kids. Worldwide exchange rolls on. Welcome back to the show. I'm Dominic Chu, and this morning for Brian Sullivan on this Thursday, December 5th, 2019. Let's get a check on this other morning's top headlines. NBC's Francis Rivera is in the New York newsroom with the latest. Good morning, Francis.
Hey, Dom. Good morning to you. We start with breaking news overnight. A lockdown has ended after a shooting at the Pearl Harbor Naval Shipyard in Hawaii. Officials say a U.S. Navy sailor shot and killed 2 civilian shipyard employees and wounded a third before killing himself. The wounded victim is in stable condition. Military officials say there is no indication yet whether the civilians were targeted or if this was a random attack. House Democrats now laying the foundation for their articles of impeachment against President Trump. At the House Judiciary's first public hearing, 3 constitutional scholars invited by Democrats said unequivocally the president's efforts to pressure Ukraine were an abuse of power. Another scholar invited by Republicans disagreed, saying the case was based on inadequate evidence. With no additional hearings on the schedule, what's next is still unclear, but the president's legal team has until tomorrow to decide whether White House attorneys will participate with the inquiry. Just a few hours ago, the world's most famous Christmas tree was lit here in Rockefeller Center. The 77-foot Norway spruce has more than 50,000 LED lights and is topped by a Swarovski star. I know everybody, tourists and New Yorkers, love to comment, but you've got NBC employees who need to get to work, Dom. So we kind of divert and go, as far away from it as we can when we come in.
And now it is officially Christmas in New York. Thank you very much, Francis Rivera. Well, here's how stock futures are looking halfway through the 5 a.m. hour this time around. Check out what's going on. We could have 2 days in a row. We're going to halt a 3-day slide if these futures gains can hold throughout today. The Dow would open up by about 85 points, the S&P about 9 points to the upside, and the Nasdaq up by 29 points. Now to that developing story involving Huawei as it looks to overturn a ruling by the U.S. banning the use of government money to buy its equipment. CNBC's Eunice Yoon joins us now. Eunice, break this down for us. What is the legal challenge, and what does the company have to do to win in its efforts here?
Well, Huawei is taking on the FCC in court. The company has said that it is fighting the FCC's designation of it, as well as the local rival ZTE, as a national security threat. So the FCC last month had designated these two companies as risks to the U.S. because the commission believes that these companies have ties to Beijing and the Chinese military, and also because of the way the Chinese regulations are, the commission believes that Beijing puts demands on these companies and that the companies have no choice but to comply on intelligence gathering. So Huawei has now said that the FCC doesn't have the evidence. It says that the decision is unlawful and that the company is being penalized for its Chinese roots. So the FCC decision is important to Huawei because it bars its U.S. customers from tapping into an $8.5 billion government subsidy program to help build out the wireless networks in rural areas. So ZTE as well as Huawei both have been used a lot of their gear is in those networks because they are very price competitive. But now it looks as though the U.S. carriers will also have to remove and replace a lot of that Chinese gear from their existing networks. So the petition is the latest example of a new strategy that Huawei has in place to take on to defend its reputation through legal means as well as a major PR campaign. And then, Dom, of course, there is a question as to whether or not Huawei and this latest aggressive move is going to impact the trade negotiations. So far, it looks as though both sides still want to keep the issues separate.
All right, Eunice Yoon, thank you very much for that update on what's happening with Huawei. Speaking of, Eunice Yoon just brought it up. China's Commerce Ministry offered new comments on the ongoing trade talks with the U.S., saying tariffs should be reduced in order to reach a phase one trade deal. Let's talk a little bit more about this with Clayton Allen, Senior Vice President of Trade Policy and Geopolitics at Haidt Capital Markets. So, Clayton, you heard Eunice's update. Will we have an impact from Huawei on trade?
I think Eunice was absolutely right. To this point, it seems as though both the U.S. and Chinese governments are really trying to keep the Huawei issue, whether that's the FCC ruling, whether that's ongoing efforts to limit Huawei's growth in the U.S. and allied countries, really trying to keep that separate from the trade negotiations.
All right, let's say that they can keep it separate from the trade negotiations. How are the markets responding to these particular headlines? There's been many accusations out there from perhaps frustrated traders that this seems like a manipulated market based upon all these headlines. What is it that investors and traders have to focus on more to avoid all of the noise associated with some of these trade headlines coming out, whether they are positive or negative?
You hit the nail on the head there. The issue is being able to separate signal from noise, and the market, honestly, has not done a good job of that day to day. Great example would be President Trump's comments at the NATO summit in London, where he said, look, I don't necessarily need a trade deal until after the election. Okay, great, but markets took that very, very negatively, but look at that in context. He said things like that before. More importantly, he said things like that towards the end of almost every negotiation his administration's been involved in. So there's an issue of being able to separate what's important from what's not. Huawei is certainly a very important issue, but I think the more overriding thing to watch, the thing that investors and traders should really be following, is how is each side framing this? The Chinese are obviously concerned about the political framing of a deal domestically. That's why they're pushing for tariff rollbacks. They want to be seen as getting just as good of a deal as the U.S. is getting, and President Trump has made it pretty clear that that's not his intention. He doesn't want a one-for-one trade.
What is the U.S.'s strategy right now, Clayton, with regard to how you tackle these negotiations heading towards a tariff deadline, if you will, a soft one at the very least, of December 15th? And then how exactly do those talks then kind of play out in the early part of 2020? And do we believe President Trump when he says he doesn't maybe want to do a deal until before, or rather after, the 2020 election cycle?
So I would start with your last question. I think absolutely President Trump does have some political advantage to holding off from a deal, a full, let's get together, sign a piece of paper, start rolling back some of the actions we've already taken. Absolutely, he does have political advantage to delaying that, because the minute he signs anything like that, he's immediately going to take criticism that this was a capitulation to China, that he didn't get enough, that he wasn't pushing as hard as he should. By the same token, though, December 15th tariffs maybe can be delayed separate from that. We've seen Trump delay tariff implementations before to make room to negotiate, to try and get a better deal. And if that's what investors are looking for, if investors heading into the end of this year are really concerned with, can we avoid these December 15th tariffs, that's still on the table, but a deal, quote unquote, might not be.
All right. A lot of complexity there for sure. Clayton Allen, thank you very much for those thoughts on trade this morning.
Thanks for having me on.
Well, back now to oil. With crude prices under pressure yet again as OPEC weighs deeper output cuts at its biannual meeting in Vienna, we are looking at prices right now moving to the upside after big moves yesterday on inventory data in the United States. Brian Sullivan joins us again from that summit with more on what we need to be watching today. I'll send things over to you, Brian.
Yeah, Dom, thank you. Well, what we need to be watching is hopefully the arrival of the Saudi delegation within moments. They could pop up at any moment. Once the security guards come out, they're going to do that. So if we do that, we'll try to get some comments for them on camera. Here you go. Before we welcome in a guest, I want to talk about the two things that we care about, the bull case and the bear case, right? Ultimately, why are we here? We're here to determine where the price of oil may go so that the U.S. oil industry knows if it's going to go bankrupt next year or it's going to have good times and probably make some free cash flow. All right, what's the bull case? OPEC thinks that global demand will tick up next year just a little bit. You got U.S. growth slowing. We are still expected to grow, but that growth might be slowing. That's primarily the bull case. You got the Aramco IPO, which some people say may help provide some kind of a floor to pricing. On the bear side, well, what if demand does not go up? Demand was flat year over year. Those expectations, they're just a bunch of economists putting guesses out there. If they're wrong, if global demand is not up, that could be on the bear case as well. You got the OPEC cheats, of course, the Iraqs, the Nigerians. They're the ones that a long time necessarily do not adhere to that deal. And by the way, you got a lot of new production around the world. Norway opening up a new field, 350,000 barrels a day already online. Brazil's on its way up. So there's a lot of variables on the bull and the bear case. Oil's been pretty much flat year over year. Let's bring in a guest now. Bhushan Bari is Executive Director of IHS Markit. And Mr. Bari, good to see you again.
Nice to see you,
Saudi show, I'm going to have to sort of pop over here, so my apologies in advance. This was supposed to be an uneventful meeting.
Yes.
I'm more concerned about what happens to the U.S. oil and gas industry, but it looks like there is some conflict right now. What do you think? Will they go for longer cuts? Will they go for deeper cuts? Or will they go for a combination of both?
Well, I think what's happening right now is they know they've got to do something next year. Should they do it now? And if so...
Well, it's almost next year.
Yes. And what should they do? So the issue is whether to cut a little bit now, which will just be sort of symbolic, or go for the deep cut now and deal with the fallout next year. So it's really unresolved right now.
Yeah. It's funny because we go to your conference, Zero Week, obviously in Houston. One of the main reasons that we're here, Bhushan, is that you're looking at a U.S. oil and gas industry that has $600 billion in long-term debt on $71 billion in net income. Those are bad numbers. These stocks are down 50, 60, 70%. Is there anything that OPEC can do? Okay, the Saudis look like they might be showing up here. Excuse me, Mr. Bari. Looks like the Saudi delegation is here, indeed, live on camera. Here we go. This is the first meeting with His Highness, His Excellency.
Your Royal Highness. Your Royal Highness, how does your meeting with Mr. Novak go?
Hello, Mr. Your Highness, Brian Sullivan from CNBC US. Could we get a comment on camera, please? You'll speak to the world, sir. How do you expect the meeting to go? Are you expecting a long meeting or a short meeting today, sir? Thank you, sir. Thank you very much.
Thank you.
Sorry. I'm still live on camera here, but hold on. You're very welcome. You got some pictures there? All right, so those are some comments. The comments from the Saudi oil minister coming in. It's his first meeting. Remember, he is a son of the king. He's half-brother to Crown Prince Mohammed bin Salman. He's been around the oil and gas industry for about 40 years there. If you couldn't hear the comments, and I know you can't, it's a big scrum. Basically said he's expecting a good meeting and hopefully not too long of a meeting. Now, We've had OPEC meetings that have gone on for days, Dom. I don't know if that's going to happen here. Mr. Bahri, I apologize for sort of jumping you out like that. We have more delegates that are arriving here. He was smiling.
Yes.
Can you read into that? Do you think that that's a good sign?
Well, look, Brian, what's happening here is they're trying to put a floor under the price here. They're afraid it might go down further if they don't do anything. As for increasing it, I think you had a right point when you were reading earlier on. It depends on demand next year. That's crucial. The demand is what will push the price up.
How did you see demand flat? Or do you see demand ticking up just a bit? The manufacturing recession may be coming to an end.
It's pretty anemic right now. Trade issues are still out there. There's a lot of uncertainty about the global economy. And so it's just really not looking very good right now.
Bhushan Bahri, thanks for rolling with that. That's live TV, brother. You know what I mean?
Thank you, Brian.
It's 29 degrees out here. All right, so the meeting, you can see the Saudis are here. The meeting is underway. We're going to be here for you guys all day long to figure out exactly what they're going to do and what it means for the U.S. oil and gas industry.
In what could be a live meeting in Vienna for OPEC. Brian Sullivan, thank you very much. We'll see you later on the show. Coming up, it's a tale of two retailers as Dollar General and Tiffany prepare to report earnings. We'll break down what to expect and where retail stands as the clock ticks down on this holiday shopping season.
Simply irresistible. The Jewelry Exchange has this 3-carat GIA heart-shaped diamond for $19,000, 8-carat platinum necklace $9,800, and 8-carat studs $35,000, plus the latest custom and designer mountings. Magnificent. The Jewelry Exchange.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Statement necklace? Or let your neck make the statement.
Gold Bond Neck and Chest firms and repairs depleted skin. And new Neck and Chest Age Defense with SPF helps protect from visible signs of premature aging. Gold Bond, Ultimate Lotion, Ultimate Skin.
Earnings season is winding to a close, and that means retailers remain in focus with two names set to kind of keep investor attention this morning. You've got Dollar General and Tiffany both reporting before the opening bell. Two very different narratives, but both stocks are up significantly on a year-to-date basis, as you can see there. This after what many are calling record-breaking Black Friday and Cyber Monday numbers for the industry as a whole. So, is the American consumer still there and still powerful? Joining me now, Jay Rogers Niffen, Worldwide CEO and CNBC contributor, Jan Niffen. Good morning, Jan, to you. And let's talk about this wrap-up of earnings season. It's luxury versus budget. Who's winning, and can both win?
Well, both can win, and it's very clear that the lower levels like Dollar General, Walmart, Target, they're winning. The upper end may not be quite as good, but the upper end is still really good. So we haven't seen any cracks in the consumer so far. I know there was a report out that said something about the upper end might not be spending as well, but that's just not been true. I mean, we saw a really strong Black Friday right across the board. An unprecedented weekend. When you think about Thursday through Monday, and you think about both online and off-price, online was probably up 20%, 19.9, something like that. And in-store must have been up in the range of 4% and maybe more, despite the fact that traffic fell. So what happened? The people who came in were more likely to buy, and they spent more. So it was really a strong performance. I mean, the consumer looked fabulous over that time period.
In your experience, what does drive that kind of spending at that level? Is it the wealth effect? Is it a stock market at or near record highs? Can we expect to see for the rest of the holiday season those luxury retailers do well because the market is doing well?
Well, what we didn't get was a big drop in the stock market like we got last year. And that's a big help, of course, when the market's strong and asset values stay up.